All right, guys. So today we have Tesla earnings. Tesla actually having a pretty good day after some drops the last couple days. And so, yeah, let's see what we get today, guys. It's Tesla earnings day. It's the first major tech stock that we've had reporting earnings this earnings season. And, yeah, hey, we'll see what happens. It's time. I'm ready. Hopefully we get some good stuff going on, good results. I'm ready for it. Again, the last earnings report definitely didn't help the stock. We'll see if today's earning report helps the stock. And, yeah, let me put the screen up. All right, so again, here's Tesla stock right here at 144s. Again, quarter one earnings. Expectations are 49 cents a share here. So, all right. We got this banner up. We're going to put up what Tesla is expecting here. $0.49 EPS on revenue of revenue is expected at 22.71 billion. All right, so here we're gonna put the expected numbers that we got. We'll put the Q up as well. The market's showing some bullish action today. The Q bouncing back to 425s. Checking everything else out today in markets. Gold still kind of choppy and flat. What is y'all predictions? Let me do a poll here. I don't think we did a poll yet. A poll yet. This Tesla beat or miss their quarter one earnings. Beat, miss, I don't know, /see results. Let me know how you feel. Beat or miss, chat. Beat or miss. Let me know. Tesla expecting 49 cents a share EPS. Not the biggest expectation. Last time they showed like $2 and something cents, I believe. So if we pull this up, again, last Tesla EPS was 226. So they're expecting the lowest EPS rating in 3 years, since September of 2021. A little bit under 3 years, but still, they're expecting the lowest EPS rating or EPS result in 3 years or so. We'll see what happens, chat. We'll see what happens. But yeah, is your nose stopped up? I'm eating right now, so I'm eating. Trying not to breathe into the mic. That might influence. All right. Pollen, yeah, my nose, I don't know if my nose is stopped up or not. But I know I'm not really breathing out of my nose because I'm trying to not eat. I'm eating a pot pie right now. It's a veggie pot pie. It's broccoli, mostly, and cheese pot pie. Looking at our poll numbers, 54% think they're going to miss, 32% or 31% think they're going to beat. So most people expecting misses here. Let's do a Twitter poll. It's the first major earnings report for tech, to be honest. We've had some other earnings, but nothing's big. Definitely the biggest evening earnings report that we've gotten. All right, so we got that poll live as well. Vegan John. Definitely not a vegan, but I do like some broccoli and cheese pot pies, though. All right, chat. Tesla earnings. I'm ready, guys. I'm ready. We'll see what happens. I'm ready for it. Is going to red and is going to fly. What? Again, let me look at their revenue expectations. I think they're pretty flat for revenue. I don't think they're coming in much higher than expected for revenue. Or I don't think they're increasing much quarter to quarter on revenue either here for Tesla. If you look at Tesla, yeah, they are expecting. So Tesla currently expecting. Tesla is expecting 22.7 billion. The last earnings they showed 25 billion. So expecting a slight decrease. It's not the big, like, it's not as big as their EPS decrease. Like this line still should be, and I don't know if it's seasonality related, but this line will be about right here. I would say right about there. No, that looks about right, huh? Let me see. Yeah, so this is where their earnings are projected to come in. I'm not saying they're gonna hit this, but this is where they're projected to show up as. So I said beat just to be contrarian. Pollen season. Yeah, maybe. All right, chat. We got 45 minutes. 45 minutes. I hope we go to the moon, but I really have no idea. I'm in Tesla. I want it to go up. I hope it goes up, but it might not go up. I don't know. We'll see. I'm not one of those guys that acts like I've got some super secret technical level that, you know, like, or somebody that acts like I've got some system to predict earnings. Nobody does. Nobody knows. It's a coin flip. The only people that really know are the insiders in the company, and they're not allowed to say anything. So. All right, guys, we're at 145s or so, 145s. The Q at 425.50, so the Q is starting to pull back, but again, mostly a green day in tech. Let me look at my equities portfolio. Oh, we're really nicely green today. Hey, that's nice. Home Depot doing me right today. Netflix doing me right as well. You love to see it. Alibaba, almost green in Alibaba. Tesla about to miss. Will it miss? Do you like the Cybertruck, guys? Do you think making the Cybertruck was a good decision? That's a real question. Do you think making the Cybertruck was the right move or not, chat? I don't know. Personally, I really don't know. I don't know whether I should take some off on Home Depot. Tesla B's 100% guaranteed. I don't know, man. I nothing's 100% in markets. All right, so far we asked people on X, does Tesla beat or miss? 54.5% of people say miss, 45.5% of people say beat. So pretty split down the middle, but the bearish outlook traders are definitely higher now. We also did a poll this morning based off of what the chat always asks me here. And the poll said, quote, if Jerome Powell walks outside and stumps his third toe on his right foot on a Sunday, does the SPY break 505? Let me know what you guys think. Again, I'm eating a broccoli pot pie. But I'm going to say this again. If Jerome Powell walks outside and stumps his third toe on his right foot on a Sunday, does the SPY break 505 today, guys? Let me know. SPY is over 505. So the answer, of course, was yes. It does. SPY at 505.30s hit 506s. So again, we'll see if that continues the bullish action. Again, markets are down a lot over the last week or two. We do have in-phase. Yeah, we're going to cover all the other major earnings today, to be honest. We're going to cover all of them. We're going to cover Tesla, Visa, in-phase, Texas Instruments, Seagate, Steel Dynamics, Chubb, Baker Hughes, Mattel. All the other ones, too, we're going to cover. So, you're welcome. Guys, hit that like button. Run those numbers up, chat. We appreciate it. Cybertruck, a controversial head turner with small margins, arguable, but I'd say good for Tesla in the long run. Yeah, I agree. I think it's going to make people pay attention to them again. Yeah, I think people are going to pay attention to them regardless. Does the color of his ties really symbolize anything? It's a joke. No, of course not. It's sarcasm. Dude, you know how many people ask the most ridiculous things from me on YouTube? Like, they're literally asking me nobody knows anything about what's going to happen short term in earnings. Like, again, you take new traders, right? New traders think that a company has to report good earnings, and if it does, it goes up. If it reports bad earnings, stock's going to go down, right? Not really an unrealistic expectation, but anybody that's watched any major earnings report in a stock understands that's just not how it goes, right? Stocks can do whatever. Most of the moves actually baked in by the time the earnings are announced. And so asking me what's going to happen, nobody knows. Nobody knows. We got to wait and see. It's a coin flip at best. There's not really much edge in taking big positions ahead of earnings and trying to bet on earnings. You can bet on the reaction sometimes, as long as you don't get faked out on the first move. If something's really, really strong, like if a company posts way better than expected EPS, way better than expected revenue, way better than expected, specifically guidance is an important one, that can cause more predictable moves. But in general, we saw a lot of companies this morning have good earnings and drop. Guidance is a big important one, though. You said 100 is too much for a Tesla. I would buy for 80. What about 79.95? I mean, correlation doesn't mean that there's a causation, Ian. So you might find a predictable pattern, but it doesn't mean there's an actual cause behind it. Sometimes you just, there's an old movie, I can't remember what it's called, about a guy who tries to predict the stock market algorithm, and he goes crazy trying to do it. He sees all these patterns that aren't really there for that kind of thing. So just be careful. Easiest way, company's healthy, long term they go up. Yeah, buybacks are big too, for sure. What if he does have a system? I mean, that's great, but he doesn't. I would sign up for FSD for $99 a month. Of course, I would too. I have no idea, ST. I don't know whether you should sell it or not. Ask the chat. Chat might be wrong, though. All right, 64% say Tesla's going to miss. 25%, 26% think they're going to beat. 11% say, I don't know. All right, chat. Hey, I might need to go get some caffeine. I tapped a black belt today in jiu-jitsu. I mean, again, he might have been letting me work, and so I can't really brag that much about it, but I'm still excited about it. I'm not going to say who or what or anything like that, but scammers, man. Listen, the rule of thumb, if you ever see anybody promoting a specific trader in the comment section, never ever believe them, right? Somebody in the comments saying, hey, this guy Bill is the greatest trader of all time in the world. He helped me earn $7,327.63 yesterday. Do not believe them. They're scamming you, okay? I'm seeing it right now. The only reason I'm saying this, I've said this a lot before, just don't get scammed, all right? The Tesla info on your screen blocks you. Oh no. I like you, John. Just don't want stock advice from YouTube chats. I mean, listen, bro. I get it. I don't like stock advice from YouTube chats either, brother. I'm right there with you, man. If anything, people ask me for stock advice every day. I tell them I don't know. I'm probably the only stock YouTuber in the world that has grown a following saying I don't know about things. And again, I think that's the way I'd love to have it. Because again, I really don't know. Nobody does either. You got a 50-50 shot. So, I mean, hey, listen. Throw out your predictions if you're right, Slang a course, Tell people you're a millionaire. But I'm not doing it. Yeah, there's a lot of weird correlations. So the popularity of the first name Walker correlates pretty accurately with Old Dominion Freight Line's stock price, ODFL. Bachelor's degree, there's a correlation between bachelor degrees awarded in precision production with the number of parking enforcement workers in New Jersey. There's a positive correlation between yogurt consumption and the Bank of Nova Scotia's stock price. Correlation doesn't mean causation, guys. The Q, really nice trend. Maintaining that 200 EMA really, really well. Following it for the most part. A little bit of the volume-weighted average price in the 200 EMA. Tesla is now, it's still up on the day. When you look at Tesla chart, it's had a rough year. 2023 is even worse. You look at a 90-day chart, it's pretty bad, right? But maybe that means we got extension on the downside. You know, if we're looking at PE ratio wise, like let's take a look at Tesla's PE ratio. Let me take a look at this. All right, so let's calculate it. I'm not looking at forward PE. I'm looking at historical PE. Okay, so don't get mad if it's not forward PE. I'm not looking at forward PE. All right, so last earnings report, they showed 71 cents. 91 plus 0.85. So they have a yearly EPS of about 313. Their share price is currently about 145. Was it 314? 313? I think it was 313, but it's okay. All right, so they've got a PE ratio of about 46. Not the worst. It's not great. You know, good PE is like 10, 15. So it's not the best PE ratio. It's certainly not the worst, though. You know, people keep claiming NVIDIA's got a PE of hundreds. That's not true either. NVIDIA's PE is about, what, like 60? Not the worst. Tesla a little bit better at 45. Again, though, the PE might actually go up versus this next earnings report here. So, again, we'll see what happens there. But, again, it could go up. Yeah. Yeah, Oracle. You seem like a big troll. Good day to you, sir. Do I have a oh, I think I do. There you go. Look at that. Look at that emoji. Just majestic, if you will. All right. Very good day. We needed a bounce back day for sure. I'm green in equities as well. Again, here's Tesla right between the 200 EMA VWAP level. I wonder if there's an edge in trading choppy patterns ahead of these results. Look at beardless John over here, the emoji. I've got the chin of a Greek statue over there. Anyways. Max pain is 150. We're at 145. Elon responded to a tweet saying Tesla will miss a few landmark stuff. Did he really? Hey, what's up, crime? Hey, all good, brother. All good, man. Did he really respond? Let me look at Elon right now. You gotta watch Elon. He's kind of a wild child person. You know, he's gonna be doing, you know. Where was the comment? What was the post? Arc Invest Catalyst. No, we can't link articles, but I'll have to check it out. How much money will be Elon worth in a year? Billions more than me, that's for sure. So. All right, did you know that the distance between Neptune and the sun has a positive correlation with the popularity of the name Andrea? They're both decreasing over time. Interesting. Air pollution in Oklahoma City has a positive correlation with Google searches for funny cat videos. Interesting. These are the facts I come to this channel for. Listen, I mean, that's what we're here for. My fiance is named Andrea. Well, why are you making Neptune closer to the sun? How dare you? I might have to go grab a drink. Gold slightly down in the day. Gold slightly down. Again, Tesla's up, but it's had a really big fall over the last 20 days here. So you can see Tesla chart. Here's the here's a 15-minute chart, and you can see it's been decreasing a lot over the past what is this, like 2 weeks? Last 2 weeks of market action, Tesla has dipped from about 180 down to 140s. Big percentage drop. Big percentage drop. So it's down roughly 20-25%, whatever the percentage is. It's down a lot over the last 2 weeks of market activity. Now, I'm not saying it's going to continue. Maybe their earnings can save the day. We'll see. I don't know any Andreas. I don't think I've ever known any Andreas ever in the world right now. Just doing my part. Reversal time or not, I don't know. No, I did know the Nicolas Cage one. That's the most famous weird correlation. Guidance more than earnings. Yeah, guidance is always more important than earnings. Now, they're all important. I would say the scale of importance is EPS is the least important major metric that earnings release. Revenue is probably one of them. Revenue is more important than EPS. Out of these three, EPS, revenue, and guidance, EPS is the least important. Revenue is in the middle, and guidance is the most important. That's in my scale from watching most major earnings reports and calls over the last years. I would say that's the scale. Guidance, the most important one. Revenue, very important. EPS, still important, but less important. But again, this isn't definitive. These can change, so these can vary. So my point is, sometimes a company is going to report good revenue, bad EPS, and good guidance and still drop, right? So it's not a definitive thing. But yeah, that's what do you guys think? I would assume guidance is more important, and from watching charts, guidance seems to move things more, followed by revenue, followed by EPS. Profit margin will be huge in demand for the vehicle, so production versus deliveries. Oh, I do know the chess player. I have seen the chess player. I don't watch The Walking Dead. I was more of a Game of Thrones type of guy. I like The Last of Us is great. Game of Thrones is great. I like the new one. House of Dragon's good. Yellowstone. I like Yellowstone. I like 1923. I like 1883. They're all good. Guidance, yeah, guidance is definitely the most important. Netflix is up again. I don't know if I should take some profit in Home Depot. I'm up a lot today. I think I will. I'm gonna take a small piece. So we just took a little bit off. What else did I buy a couple days ago that's now up a lot? Netflix. Ooh, Netflix, man. Yeah, we made. Okay, I'm gonna take a piece of Netflix off. Lock it in. Again, it's a big earnings week. We got a lot of stuff going on. Haven't seen Fallout. Although Pawn said it was good. TSM and Netflix did great on earnings, but guidance was bad. Yeah. I mean, but, that's how it goes sometimes. Elon said they needed all hands on deck to ramp up production. Now he's firing off a ton of people in Texas. Yeah, but generally what's weird is that layoffs have helped tech stocks over the last 6 months to a year, right? A lot of companies have reported layoffs over the last year, and they've gone up from it. My guess is better margins, improved margins. And so it's weird that Tesla's going down so much on layoff news, because every other tech stock has reported layoffs and bounced. Very obviously a bounce from the layoff. So it's interesting where, Tesla's down from it. I don't know. I'm hoping Tesla moves up, but who knows? Well, it's obviously a tech company, Sam. Yeah, so it's definitely a tech company. I mean, one of Tesla's big future bets for me is on FSD. I think FSD is the future of driving, and I think that's very clear. I think when my son's old enough to drive, cars are going to drive themselves, park themselves, and then that is going to correlate to like Uber and Lyft, where the cars completely drive themselves without even a person there, and You know, you're going to have robotaxi, like completely autonomous robotaxi companies that deliver things. Now, I don't know how soon this is going to happen, but I think it's eventually obviously going to happen based off of what we currently have. I think FSD is a big thing, and it's certainly here, but it's still not full, you know, we don't have the infrastructure perfect right now, but speed bumps happen. That'll come, I think. It just depends on when. It might happen in a year. It might happen in 20. I don't know. Yeah, I'm not sure, I'm really not sure. Yeah, like Netflix subscriptions are important, of course, but with Tesla, not so much, unless we're talking about FSD and software subscriptions, which is possible. Why can't other EV companies have their own self-driving software? I mean, they can and they will, Lewis. Tesla's just in the front of it. They're on the front of it a little bit better than others. So Tesla's on the front of it. They've been building it for a long time now, and so I think relative to other companies, they've got a head start, and I think usually that equals success, but not always. So yeah, I mean, it doesn't necessarily, it's not definitive. No, the Mercedes they announced autonomous driving, but it was much more restricted than Tesla, I'm pretty sure. So I think Mercedes has a version of it, but I don't think they're as close to Tesla, you know. They might license it out. I don't know. Infrastructure is a serious issue. Over time, though, it gets built, usually. Like, you got to think, like, automobiles came out in the 1900s, really the 1800s, but, like, working well automobiles came out in the 1900s. When you first got started, it was kind of a mess. It was messy. Anytime you have a new technology, that's going to happen, regardless of whether we're talking about Tesla, whether we're talking about, you know, whomever, right? When you have a new technology like this, people are going to be skeptical. They're going to fear it. They're going to hate it because it eliminates some of the old industries and businesses. But eventually you're going to get adoption for it. I think that's pretty clear historically with a lot of new technologies. And I think it's going to have a snowball effect when people see full self-driving vehicles. They're going to want one, and they're going to get one, and then people are going to see them, and then more people are going to want one, and it's going to snowball. But again, the time frame is the speculatable part, I think. It's not about being copyrighted. It's about who's the closest to getting it done, Sam. And now there's definitely, the algorithms are certainly going to be protected. So the individual algorithms are certainly going to be protected. I think that's where Tesla's on the front. I think that's where Tesla's doing well. The algorithms specifically are going to be certainly copyrighted, certainly, you know, proprietary, and, you know, each individual company. But again, as with most major corporations, you're going to have spies that steal the software and give it to competitors for money and like all this different stuff. So you're going to have that most likely with any major corporation like this breaking into tech. But I think Tesla's on front of it. I think they're the closest. And again, I'm not sure when it's going to be. Yeah. I don't know. The p-value and the number of Ewan McGregor movies appeared in correlating positively with the number of ophthalmic medical technicians in Connecticut has a positive correlation. The p number is greater than 0.01. Or no, less than 0.01% is the p. So, I mean, it's pretty low for the Ewan McGregor versus number of ophthalmic medical technicians in Connecticut. That correlation is pretty high. But yeah. Anyone do put options? No, I'm not going to buy up a big... Again, I'm not one that takes huge options ahead of earnings releases. That's just a straight up gamble. There's no edge in doing so. Like, why are you... Again, no offense, but that's just justifying gambling. You know? Like, again, nobody knows what Tesla's going to do. Tesla's already down significantly. And so that's a risky bet. Again, you might be right, and so you might ride off into the sunset happy. I'm not telling you you're not. I have no idea what you should do. So do not copy me. I'm not an investment professional. I just think that that's a risky bet, brother. Yeah, it's hard to have good earnings. Looking at our poll numbers, let me check it out. So again, 60% people think miss, 29% think beat, 12% just wanted to see the results. I also did another post on Twitter or X. You can follow me at Beginner Trades, at Beginner Trades. 37% think they're going to beat, 63% think they're going to miss. So it's actually pretty similar correlation. Like the beat expectations are in the 30s, the miss expectations are in the 60s. So same correlation with both X followers and YouTube followers. Interesting here. Although on YouTube, beat has dipped down to 29% with 60% miss, but similar correlations there, or similar percentages there. When will PCE come out? PCE comes out on Friday. GDP comes out on Thursday. Meta earnings come out tomorrow. Google, Microsoft earnings come out Thursday. With GDP data comes out in the morning. PCE data comes out in the morning. Earnings come out in the evening. We got a bunch of other earnings positions too, and stuff to cover, but yeah, those are the major ones. AI and quantum computing may accelerate. No pun intended. I hereby predict. Tesla will report expected beat earnings. Price will trace out. I bet $1. Risky bet. That's why I'm short on NASDAQ right now when Tesla will publish earnings. 4:05 p.m. technically is when they're scheduled. I took a smallish $13,000 put position on Tesla, which I almost never do, but there is no way this thing has good earnings, and I'm already up about 9K, and I can sit on these out to next week. Hey, good luck, Eli. I hope you make money, brother. I mean, I'm in Tesla, so I hope you're wrong, but yeah, good luck, bro. Again, I'm in Tesla long term, so, and we're not really down that much. We rode Tesla up, took profit, and then I think we cut a little bit on this latest dip, so we're not in a huge position. We're green today, though. That's nice. Yeah, Meta was crazy. I watched Meta happen, and again, to be fair, I was skeptical of Meta. I was kind of a bear in Meta. I thought Mark Zuckerberg was making some risky bets on the metaverse, and in hindsight, he did. He lost $10 billion in the metaverse in 21. I think it was 21. It might have been 22. But he lost billions in the metaverse. Facebook is becoming less and less used by newer generations. TikTok, Instagram, all getting pretty big. And so when you look at Facebook, as somebody that grew up in the social media boom where, you know, when I first started using social media, I used MySpace. And then I transitioned to Facebook and then transitioned to whatever. And I know Facebook owns Instagram. But I think, you know, one of the very common things that you see is that younger generations typically do not want to use the same social media platform their parents do. And so they're using different social media platforms. They're using Instagram and TikTok and all these different things. And I think that reality, and I think it is a reality, is going to, you know, I don't know how I feel about Meta long term, but short term, they're strong, and they ended up, Meta was one of the best investments you could make. Look, Meta hit, I was skeptical of it. They were at like $100 a share. Meta, though, has gone from, you know, less than a year ago, too, which is crazy. Oh, no. This was over a year ago. So Meta in 2022 was $89 a share. How crazy. Now they're back at 500. So they have gone up 400+%. Crazy. We'll see if it holds. But, yeah, Meta earnings tomorrow will be fun. Tesla very choppy ahead of this earnings report. I'd be happy with sideways. Can you see a reality that they come in better? Here's the thing, right? This is why I'm saying earnings are risky. Nobody knows. Tesla could report bad EPS, bad guidance, bad revenue, and go up 5%. Right? Like, you never know. It's not predictable in that way. That's why I'm telling people who buy huge put options right before earnings are released, straight up gamble. Like, go play roulette or something. This is you know, I've said it before. Somebody makes 20K in roulette, you're gonna look at them like they're kind of degenerate gamblers. If somebody makes 20K buying put options on Tesla and it hits, you might look at them like they're a genius. You know, they're both doing the same thing. Now, again, it depends on when you bought it. If you bought it weeks ago and you took advantage of this downward move and now you have a positive edge heading into earnings where you've got extension in room, fine. That's okay. But if you bought it today and you're looking to hit big on volatility, just a risky thing. Coin flip in nature. Like, again, Tesla, on the other end of that, Tesla could also report better than expected EPS, revenue, and guidance and dump 5-10%. You never really know. My bet, though, if I had to make a bet, and again, I really don't know. I'm just straight up gambling, or I'm just straight up guessing here, not gambling. My guess is on the upside, regardless of what they show. The reason my guess is that is because they're down so much already. So much percentage-wise already they're down. We just got a lot of extension. We're at the 140s, 130s. I think the probabilities that we're going to bounce at least a little bit from earnings are high. But again, I might be wildly wrong, and Tesla could just dump. But we'll see. What do you guys think? Does Tesla react, regardless of what the individual earnings show up as? Do you think they go up or down from this report? I'm not telling you it's a good play. I'm telling you it's a little bit more understandable. Okay? So it's a little bit more understandable. I'm not saying, I don't know what's good or bad. I'm not an investment professional. In fact, I have no idea what I'm talking about. I might be wildly wrong about everything. Don't sue me. Remember, I am terrible. Have no idea. Might be wildly wrong. Understand the implications of CFTC 4.41. Understand I do trade off stream. I can't guarantee anything. Have no idea what I'm talking about. Don't copy me. But yeah, good luck, brother. Have to go up unless they make a 52-week low. Chart says they're going up. Well, the chart doesn't mean much with earnings. I mean, extension matters. But, I don't know. You get these technical guys. And again, I'm not talking about you or anybody in particular. You get these technical guys, and they will blame every fundamental move on technicals, right? CPI will come out way lower than expected. The market rips up 10%. And they're acting like it really went up because the 200 EMA crossed over the 5 SMA. You know, it's just... fundamentals are usually more powerful moves than technicals. Now, technicals matter, but they matter in the context of, like, Tesla is down for the last 2 weeks straight, you know? So we have extension on the downside. Like, sellers might be a little tired now, and so that might influence the earnings reaction, but it's still going to be earnings movement, fundamental movement. Tesla's 110, it will be undervalued and everyone is going to sell. Wouldn't they buy it if it was undervalued? I don't know. All right, chat. Looking at our votes, we got 60% saying miss, 29% saying beat, or 30% saying beat. So most people think they're going to miss here, chat. We'll see. Again, Tesla's choppy right now. We got this choppy range. Why is GE going up so much? GE had earnings early this morning is probably what it was. Yeah, it killed it on earnings too. GE posted, let me see what they posted. I didn't even really watch GE. I'm kind of mad looking at the chart. I saw GE at like 20 something bucks like a year or two ago, and I didn't buy it, and now it's at 150 plus right now. I'm still kind of mad about it. GE posted first quarter adjusted EPS of 82 cents. They initially expected 67 cents, so a beat on EPS. They ended up posting revenue of 16.05 billion. They beat EPS and revenue for GE. That's why they're up. They're up a lot too. They're at 160s. All right, guys. Earnings. Let me get a timer. I didn't do a timer. My bad, team. I did not do a timer. I forgot. Technically, Tesla's scheduled to release in about 13 and a half minutes. It's really technically scheduled to release at 4:05 p.m. market time. So we got about 14 minutes left. They miss again. Elon will make some excuses. Regardless of their mishit, Elon will tank the meeting as usual, especially if he pushes Robotaxi. We can't see your face now because of the message. There you go. But But because I rarely ever do this, I bought these last week. I'm up 9K and I can hold these out. Hey, good luck, dude. I hope you make some money, brother. Just be careful. If you're up big, you know, I'm not going to tell you to take profit. Just, you know, be smart. I don't know what you should do. Good luck. No way they missed. Cybertruck was released and new Model 3 has begun delivery. Yeah, but Cybertruck wasn't, while it's popular, the margins aren't good on it. It's going to take a while to let that actually impact the bottom line. You know, so again, the margins, are might not be that good. What do you think of AMD PE? I mean, it's obviously high, but AMD's making more money now. So is Nvidia. You know, people always bring up Nvidia PE like it's some type of crazy thing. Nvidia has the same PE it had 4 years ago prior to this latest AI run. In fact, Nvidia price has kept up with its earnings to a certain extent. Like, people act like Nvidia is so extended on the upside. Not really. Like, it depends on what you look at. If you look at conventional good PE, it's extended. But if we look at where it was in PE ratios 4 years ago versus where it's at now after the AI boom, it's kind of kept up. Like, an example of this is Nvidia's PE ratio has 3x'd, right? So Nvidia's PE ratio has 3x'd. Or no, it might be a 4x. Let me see. All right, so yeah, Nvidia's okay, yeah, that's what it was. So Nvidia's revenue. No, Nvidia's PE ratio, I think, is 6x'd. Yeah, so Nvidia had a PE ratio of 82 cents at the same time last year, 82 cents. Now they have an EPS of almost $5, right? So they have 6x'd their EPS, their earnings per share. Their price point has only 3x'd, right? Nvidia's revenue has roughly 3x'd versus where it was last year, right? At the same time last year, prior to this big AI run. And if you look at their price, like how much they've appreciated, it's right on par with that. It's about 3%, 3.2%. So it's almost, the correlation is there between EPS and share price. It's kind of kept up with it, I guess is the point. Now, it doesn't mean it's not extended. There's always arguments there, but yeah. Tesla, again, at the bottom of the range, really choppy. We got 4 minutes left until the market closes. 4 minutes left. Let's see what we get here, chat. Yeah, AMD has a much higher PE. Do you think if Tesla earnings are bad, Nvidia will go down as well? It depends on what the market does. If it depends on if Tesla goes down from its earnings. If Tesla reacts really negatively and drops 15%, yes, the rest of the market will probably move somewhat with it. It's not always exact, but it'll influence markets. Tesla is still one of the top 10 stocks in the S&P and the NASDAQ. It's still part of the Mag 7 in most index funds. And so, yeah, I mean, if Tesla has a big, nasty drop from earnings, everything else would probably have sympathy with it and move with it to a certain extent. Not exactly, but somewhat, yes. Tesla sweep's coming. Well, we hit 505. Yeah. Again, Tesla, we got votes on the poll. 62.5% think miss. Future top 3 trader of all time in the world. All right, guys, here we go. Market's about to close right now. We got 3 minutes here, chat. 3 minutes before the market closes. We're going to stream the entire earnings call live right here. So we're going to stream the entire earnings call live. Yeah, full call will be streamed live. We got 2.5 minutes, chat. 2.5 minutes. Hey, what's up, X? All right, chat. I'm gonna throw this thing in sub-only mode. I don't think I've used sub-only mode today yet. Yeah, I haven't. So again, if you haven't already, subscribe. Help us hit 135,000 subscribers, chat. We're getting close to 135K. I want to push towards 150. Third best Tesla earnings stream ever in the world. Yeah. I'm going to tell my top 3 wives ever in the world right now that you said that. All right, guys, we got 2 minutes. 2 minutes. Tesla at 144.60s. 50,000 in put options. Hey, good luck, dude. All right, chat, here we go. Get ready. Best YouTuber, to be honest. Hey, my guy, thanks, man. I hereby guarantee that I will not turn my trading PC back on. Is it time for me to buy a new PC? I bought this one like 3 years ago. It might be time. All right, chat. Hey, we got 1 minute left until the closing bell. We'll see what Tesla does. 1 minute left, chat. 1 minute. Model 2? I don't know. Hey, good luck, chat. We'll see what happens. Get your last minute predictions for Tesla earnings out in chat. We got 1 minute left until the closing bell. 1 minute. Technically, Tesla earnings are scheduled to release at, technically, again, they're scheduled to release 5 minutes after the closing bell, but it doesn't really matter because they will move. Sometimes the companies will just drop it. Sometimes they're late and they'll post it like 10 or 15 minutes late. Most of the time, though, they're either on time or early. We'll see. Earnings call's at 5:30, so we still got about an hour and a half until the earnings call. But we got a bunch of earnings that drop right now as well, so we do have a lot of earnings coming out too. All right, chat, here's the closing bell here. We also have Visa earnings today, chat. Visa earnings today. We've got Visa earnings. We've got Enphase, Texas Instruments, Seagate, Chubb, Baker Hughes, Mattel. All right, here's the closing bell. And ding, ding, ding. There's the closing bell, chat. Here's the closing bell. Let's wait. All right. I'm ready. Adrenaline's going. We're at 145s for Tesla right now. 145s, 144.50. Still hasn't moved yet. Earnings aren't out yet. We just got to sit tight and wait here, chat. Yeah, Visa's supposed to drop. Yeah, we're waiting for Visa. We can look for Visa here on the right side. We're looking at Tesla. Visa's not out with theirs yet. Or no, that's not Visa. This is Visa. Nothing yet for Tesla here. Just sitting tight waiting. Did get a little dip here. It's not from the earnings though. It shouldn't be. Yeah. Still waiting here, guys. We got about 1,100 people here live. Get your last minute predictions out. What do you guys think this is going to show? All right, we got 1,200 people here live, chat. Boeing? Are Boeing earnings today? Man, Boeing has been a dumpster fire. Texas Instruments out. We're going to put these numbers up in chat. Texas Instrument posted 120 versus 107, 366 billion versus 361 billion. So better than expected EPS and revenue for Texas Instruments. Tesla's like, it depends on which index fund you're looking at. I think the S&P is still top 7. I think the NASDAQ, it might be number 10 or something. Still waiting here. Technically, we got about 3 minutes left until the earnings report drops. It's a little bit behind, and that's okay. All right, so Elon Musk recently slipped from the richest person ranking after losing billions. Who's now richer? Is it Bernard Arnault? Yeah, Bernard Arnault, the owner of CEO behind LVMH, which is Louis Vuitton, Hennessy, a bunch of other ones. He's now worth 215 bill. Second on the list is Jeff Bezos. All right, chat, we're waiting here. Nothing yet. Got about 1,400 people here live. 1,400. Still got 2 minutes here. All right, so this looks like it's out. All right, Tesla. Volatile. Big candle. 145s, 147s, 150s. It looks like it's out. All right, looks like it's out, chat. Tesla beat, it looks like, posted adjusted EPS of 45 cents, missed estimates. 45 cent missed the 51 cent estimate, so they missed EPS. 45 cents, again, versus 51 estimates. I'm looking for the revenue. But they're up a lot. I told you guys, sales came in lower than expected at 21.3 billion versus 22.3 billion expected. So again, miss on EPS, miss on revenue. I told you I thought the bias was on the upside, chat. I really did. Like, again, stocks can be predictable because extension is real. All right, so here's Tesla numbers right here. Again, they missed EPS, they missed revenue. I'm looking for the rest of the numbers here, and they're up a lot. Hey, you love to see it. Again, 45 cent profit versus 51 expected revenue of 21.3 bill, expected 22 billion. So a miss everywhere for Tesla, and that's okay because it is up a lot. Again, you look at like Visa, you look at Texas Instruments. So yeah, you look at Texas Instruments, you look at Tesla here. Tesla, again, up a lot. Now, again, sometimes the first move is the wrong move. All right, so sometimes the first move is the wrong move. Yeah, so again, when we're looking at actual Tesla numbers here, yeah, so let's see if it holds. It's at 155s right now, 155s. I'm going to pull this price up on the chart. All right, so Tesla said, quote, in the first quarter we produced over oh no, wait, this is in April. Sorry. There, let me look at the deck. All right, so here's the quarter one update. We're giving you guys this here live, okay? Profitability, they posted 1.2 billion in GAAP operating income in quarter one. If you don't know what GAAP is, it's generally accepting accounting principles. Tesla reports EPS of 45 cents versus beats analyst estimate. 1.5 billion non-GAAP net income in first quarter, 1.1 billion GAAP net income. Operating cash flow of 0.2 bill in quarter one, free cash flow of negative 2.5 bill in quarter one as AI infrastructure and capex was 1 billion in quarter one, 2.2 billion decrease in our cash and investments in quarter one. Still holding at 154 right now, 154. Operations, they increased AI training compute by more than 130% in quarter one. Record energy storage deployment of 4.1 gigawatts an hour in quarter one, produced over 1,000 Cybertrucks in a single week in April. You can look at that financial summary here, looking at all this stuff, chat. You can see their operating expenses, all this stuff in the quarter one. Decreases almost everywhere, including operating expenses, though. So increased income from operations, good operating margin. Adjusted EBITDA was a little bit lower. Adjusted EBITDA margin came in a little bit lower than quarter two. Or no, this is, let me see. Here's their quarter number, sorry. So yeah, decrease. These are all red. It'll show you. I was reading quarter one of 2023, my bad. Total revenue declined 9% in quarter one to $21.3 billion year over year. Revenue was impacted by the following items: reduced vehicle average selling price, ASP. All right, so Tesla decreasing down a little bit here. Again, reduced vehicle average selling price year over year, including unfavorable impact of mix. Decline in vehicle deliveries due to Model 3 update and Fremont factoring and Berlin production disruptions. Negative FX impact of $0.2 billion. Growth in other parts of the business. Higher FSD revenue recognition year over year due to release of Auto Park feature in North America. Is that their operating income decreased year over year $1.2 billion in quarter one, resulting in a 5.5% operating margin. Year over year, operating income was primarily impacted because of reduced vehicle ASP due to pricing and mix, increased operating expenses partly driven by AI, cell advancements and other R&D, cost of Cybertruck, decline in vehicle deliveries due to Model 3 update in factories, lower cost per vehicle, gross profit growth in energy generation, higher FSD revenue. So Tesla 2024 guidance came in growth rate notably lower than growth rate achieved in 2023. They cite the launch of the next generation vehicle and other products. So again, we're going to put these numbers up on screen. So far, they're still green. They're at 152s. So again, we're putting these numbers up on screen. Again, we're kind of going over everything else. Higher FSD revenue, quarter end cash equivalents, and investments in quarter one was $26.9 billion. The sequential decrease of $2.2 billion was a result of negative free cash flow of $2.5 billion, driven by inventory increases, $2.7 billion, AI infrastructure capex of $1 billion in the quarter one. You can kind of see everything else here in terms of Model 3 deliveries. They're all down this quarter. I told you guys, even if they come in negative, they might go up because of extension on the downside. You know, kind of predictable, to be honest. There is a predictable part of earnings, and that's what it is. Vehicle capacity, a sequential decline in volume was partially caused by early phase of the production ramp in the updated Model 3, Fremont factory, and shutdowns in Giga factory Berlin. Model 3 production in Fremont was down as we changed the production line to updated model, and Model Y production at Gigafactory Texas increased to all-time high. See all these other countries. AI software and hardware. So this is what I want to know about FSD. They say, quote, "We have been investing in the hardware and software ecosystems necessary to achieve vehicle autonomy and a ride-hailing service. We believe a scalable and profitable autonomy business can be realized through a vision-only architecture with end-to-end neural networks trained on billions of miles of real-world data. Since the launch of FSD, supervised FSD Volume 12 earlier this year, has become clear that this architecture, long pursued by Tesla, is the right solution for a scalable autonomy. To further improve our end-to-end training capabilities, we'll continue to increase our core AI infrastructure capacity in the coming months. In quarter one, we completed the transition to hardware 4.0, our latest in-vehicle computer, which with increased inference processing power and improved cameras. They said we rolled out FSD with a 30-day free trial to eligible cars in the US and Canada. It can change lanes, select forks to follow routes, navigate around vehicles and objects, and make turns. They released Auto Park to existing eligible FSDs and enhanced autopilot customers. They're currently working on ride-hailing functionality that will be available in the future. They believe the Tesla software experience is the best in class across all products. They say 4680 ramp continues successfully and stays ahead of the Cybertruck ramp. They said our non-automotive business is becoming increasingly profitable. Megapack continues to ramp. So yeah, again, outlook. So here's guidance numbers, chat. So here's what the guidance numbers look like. They say, quote, again, we're reading this here. Our company is currently between two major growth waves. The first one will begin with the global expansion of the Model 3 and Y platform, and we believe the next one will be initiated by advances in autonomy and introduction of new products, including those built on our next-gen vehicle platform. In 24, vehicle growth rate may be noticeably lower than the growth rate in 23 as our teams work on the launch of the next-gen vehicle and other products. In 24, growth rate of energy storage deployment and revenue in our energy generation and storage business should outpace the automotives. We have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such as we maintain a strong balance sheet during this uncertain period while we continue to execute on innovations to reduce the cost of manufacturing and ops. Over time, we expect our hardware-related profits to be accompanied by acceleration of AI software and fleet-based products. Again, that's what I think is the future. I think that's where they're going to do well, and this is something I've been saying a lot over the last couple, really, months. They said, again, We have updated our future vehicle line to accelerate launch of new models ahead of our communicated start of production in the second half of 2024. These new vehicles, including more affordable models, will utilize aspects of the next-gen platform as well as aspects of our current. This update may result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This will help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over the 2023 production before investing in new manufacturing lines. Our purpose-built robotaxi product will continue to pursue a revolutionary, quote, unboxed manufacturing strategy. So that is most of the hard numbers here for Tesla. Again, Visa gapping up a little bit. It's all the way, wow, so Visa killed it with earnings as well, up to 284. Tesla's still doing pretty good, up 154 right now. Yeah, I mean, I tried to warn people, like, hey, like, trying to gamble on earnings is just a gamble. It's coin flip. Like, even if you're right, doesn't mean that you're right. Again, if you haven't already, check out one of my sponsors. Apex, a great sponsor. Apex, if you want to learn to day trade, you know, in the futures market, you could day trade short, buy market, sell market, all that good stuff. No PDT. I can day trade the SPY. One of the reasons you should trade futures, in my opinion, if you want to day trade, here's the Q. And then here's Tesla on the right side. And so look how similar these look. You can day trade this left side, basically the price action. Let me put up the NASDAQ. You can day trade this side specifically in futures, and there's no PDT rule. I can day trade short, buy market, sell market, no PDT restrictions. Great way to get exposure. This is the NASDAQ 100, basically the QQQ price action. No PDT rule. I can day trade short, buy market, sell market, all that good stuff. No PDT rule. Apex is one of the most legit funded programs in the world. They give you a demo. They test your skill. If you could pass the test on a demo, they fund you the same amount. The base one's $25K. They give you a $25K demo. If you can make $1,500 in profit without losing $1,500 first and following their rules, they fund you $25K with a 90% split, and they've paid out over $100 million to their funded traders. And the best part is that if you lose, your risk is limited. If you lose the base one, you're down $30. So it's not the end of the world. Limited risk, but if you're good enough to pass it, you can get funding. And it's just a great way to test your skill at day trading before you risk money. Most day traders lose. And I'm always telling people the same thing. I think most day traders will lose here as well. They're a sponsor of mine. I'm super biased because they pay me money. You know, they pay me money. I'm biased. But it's a great way to learn how to day trade. And in my opinion, it's a lot better to learn how to day trade on a funded account program in futures than putting up 5K and losing that, which is what most traders end up doing. And so again, if you want to check it out, here's the link. Use promo code BT, beginner trading BT, 2 letters. Get the max discount at all times. Check it out. I appreciate the love. I still work with them occasionally, DD. I still promote them occasionally. We promoted them last week, so we're, you know, they're a cool company. I'm just, you know, promoting Apex right now, but they're a cool company, you know. We might promote them more next week or something. Anyways, Tesla at 154s. NASDAQ at 17,639s. We'll see if we can day trade some. We might day trade a little bit here. It depends on which account you get. They have a 300,000 account, DD, not a 350. If you fail the first time, yeah, you can always retry. Again, this is my P&L on the account we got funded on last week. It's a $100,000 account. We were kind of flat today, but I was staying pretty tight because of earnings. But this is my graph so far in the 7 days since I was funded. This is a 100K funded account, you know. And again, you got a 90% split once you're funded, so it's similar to putting the money up yourself. All right, chat. This Tesla. Let me delete this poll, and then we'll do another poll here. Now that this poll is essentially obsolete, we got about 1,500 votes here live. 1,500 votes. Let's do another poll. Does Tesla hold these initial gains from earnings? Yes or no? Does Tesla hold these initial gains from earnings? I am new to this. Can someone please explain why Tesla went up? The company is not good. Why does it even? Why? So it doesn't really make sense. Because again, everything you just said is an opinion. It's subjective, right? It's, you know, I could say chocolate cake is good, right? Somebody could say chocolate cake is bad. Are either one of us right or wrong? Of course not. It's all public perception, and that's what the stock market in general is public perception of things. It's not purely based on company health. You know, again, if it was as easy as sitting around waiting for a company to report good numbers, good EPS, good revenue, good guidance, good earnings, basically, and I can just click buy, everybody would be rich. I would just sit around waiting for a company to report good earnings and click buy. It's just simply not that easy. New traders think it is, and then they realize it's not. But it's just not that easy to make money. You know, there's a lot of nuance. Most of these reactions were front loaded in over the last few weeks or months for Tesla earnings. Tesla earnings drop quarterly for companies, and so they do not drop every week. So the reactions to them and the moves that we're getting now essentially have been front loaded for the last few months. And so even though Tesla, and again, this is something that I kind of predicted. I told you guys before the earnings report came out, I told you it was very possible for Tesla to report a miss EPS, miss revenue, worse guidance, and still go up, 5%. Like, it's very possible this happens, right? Because again, this is what it is. You also have to understand that another reason Tesla is up right now, and again, it doesn't mean it's going to specifically hold. Look at Tesla, but it doesn't mean it's going to hold, is because if you look at a 20-day chart, look how weak Tesla has been on a 20-day chart. So Tesla's down so much over the last few weeks or months that the extension, even with bad earnings, is on the downside. It's already dropped so much, and stocks aren't going to go straight down. You might not like a company, but it's not going to go. A company that sells this many cars is not going to go straight down. Nobody expects it to either. So I hope all that makes sense. It's just not. It's not that predictable. Earnings are not that predictable in terms of reactions to earnings. I wish they were. If they did, we'd all be rich. And again, it doesn't even mean this holds. Sometimes the first move is the wrong move, right? So this could certainly turn the other way and just, it doesn't mean anything. That's the first thing. Like, nothing's definitive. Again, I bring up the Dunning-Kruger effect a lot in my live streams because I think it's really important for traders to understand. Like, you got so many people acting like they're an expert, right? Like, and trading is one of those markets where people get involved and very quickly they're claiming to be experts. You got 18-year-olds with braces out here claiming to be some type of stock market expert guru. Like, of course they're not. Right? Like, they just want to seem smart. And what's one way that you can sound smart? You can act like you're an expert in the stock market. And so you see that very common. You see that a lot here. What experienced traders typically understand, though, somebody that's watched earnings every quarter, somebody that has paid attention to the results and understands how markets move, if they're honest with you, they'll tell you the truth, which is that nobody freaking knows what the stock is going to do outside of insiders in the company. Nobody knows. And so you got a 50-50 chance of being right. And sure, you got gurus selling courses, coin flipping the results. And then if they're right, they're acting like they're the greatest ever. And if they're wrong, you'll never hear it. They'll just act like they never said it. In terms of economic data reactions, nothing is definitive. Nothing is super predictable short term. So short term, nothing has real predictability short term. Long term is where things start to become predictable. So you can start to predict companies and health long term, but again, it's certainly not short term. And so if somebody's trying to predict what Tesla is going to do tomorrow, flip a coin, and that's where most people get it wrong, is because people rush in, they want to act like they're market experts, but they really don't understand, and they act like it's definitive, like the market has to do this or has to do that, and it never has to do anything. It's important. Like, what the Dunning-Kruger effect means is that that experienced people recognize how little they know. People who are new don't have that realization. And so they end up acting like they're better, know all this stuff. But again, nobody freaking knows what markets are going to do. And if me saying this can help people, listen, I'm not just saying it. I'm not being a hater. I'm being honest. Yeah, all good, Robert. Yeah. Those who speak with market certainty are just wishing, 100%, yeah. What were the earnings? They were not good. They missed EPS, missed revenue, missed guidance. They came in trifecta bad. But again, it doesn't mean anything. Tesla is still one of the largest companies in the world. Personally, I'm not one to bet against companies like this. Again, with all that said and out the way, right? Betting against the healthiest companies in the world is a dumb thing. You know, the biggest edge the stock market and really broad markets in general ever give you is that long-term investing has an edge. Value investing has an edge. Find low PE, healthy blue chip companies, buy and hold, right? That's the most effective investing strategy in the world. You know, on average, it'll give you 10% a year, and that includes crashes, which means on good years like 2023, which the S&P did 24%, on good years, you're going to do a lot better than 10%. On bad years, you're going to do a lot worse, but it equals out to about 10% gains per year on average in the S&P and the NASDAQ. That's the biggest edge the market ever gives you. And so with that in mind, I'm not going to bet against the healthiest companies in the world, because the longer I hold those short positions, the less my odds are favoring me. Like the more likelihood they're going to go up. Even if you're wrong short term about a blue chip stock, most of the time you can sit on it and bag hold it long enough and you're going to make money on it. And the opposite is true for shorts, where if you're wrong initially, the longer you hold on to that position, blue chip stocks over the long run are going to go like this. You're going to lose more and more and more and more and get stubborn and stubborn. And so just be smart, guys. I'm not saying you should never short blue chips. I'm saying that you got to get in and out if you're going to do that. And I don't know. I just don't like the edge there personally. But I'm not saying, I'm sure there's some people that can make money shorting blue chips. It's just not me. No, futures I never swing. It's all pure day trading. It's a mix of scalping and trend trading. Tomorrow we have Meta earnings. So Meta earnings tomorrow. Big earnings release too. All right, so we got the Tesla Q1 earnings call, 5:30. So again, we are going to be streaming this as well. Should I bet on the Lakers' future? The basketball team? I don't know. The real problem with Tesla is that Elon is not spending time managing it, so Tesla does not equal Musk anymore. I mean, I tend to agree with you. I'm not against Elon. I think Elon has great foresight and great predictability and analyzation. I think that's obviously, very clearly true, very self-evidently true. Elon's problem is that when you're selling things to consumers, you can't be super political. You know, you're going to ostracize a huge percentage of your user base, and people are not going to want to buy your stuff. I think that's obvious. But again, he's a lot richer than me. I don't know. I just disagree with it. I think he's being way too outspoken politically. And yes, I understand there's companies on the other side that act the same way on the other side, and I get it. But again, regardless of which way, it's risky. I'm neutral politically. I think it's risk. It's a risk for him to do that. I think it's better because, again, you got to think, like, people are pretty split politically. I see it a lot on the stream. People are very split down the middle. Some people like either side or whatever, but and so it's just a risky thing, you know. Sometimes I think your 100% honesty policy may be detrimentally affecting the channel. Those newbies who are losing don't want to hear good advice. Trading is so much harder. Yeah, it's not about whether they want it or not. Like, my channel does well. Again, I'm in this to make money. I think that's obviously true as well, right? I think that's most YouTubers. None of us are here out of the kindness of our heart purely, right? We're all doing this to make money. I'm not spending 7 hours a day, just to help people. I mean, it sounds great, but it's total crap. Like, I'm doing this to make money, of course, and that should be understandable. I'm providing a service. Like, we're all free. We don't charge for content. We don't sell a course. But again, if I'm going to make money from it, which I do very well with this, I'd rather just be honest. Even if I lose some subscribers, like, we're still growing a lot, and we do really well, and, we get 500,000 views a month, and so I think that's good. It's good enough, I would say. Yeah, we'll see what Musk says during the call. I know one thing. I know, number one, people are going to criticize his public speaking ability. They do it every time, right? Every single time they get onto his public speaking ability. Again, he's not a good public speaker. You know, I'm not even mad at it. Like, let him be whatever. We'll see what happens. Elon's problem is arrogance. You can't cuss out and badmouth other billionaires. Yeah. I mean, yeah, he's just creating enemies, of course. Like, I think that's obvious. He's creating enemies. Your chat's rubbish, mate. You're a brokey. What do you know about billionaires? I know one thing is that billionaires don't use the word brokey. You know, you ever see those people who like they wear like the shirts that have got all this money and fancy stuff on them, and there's got to be a negative correlation between people who wear those shirts and actually make money, you know. Yeah, I mean, let it out, bro. It's all right, Raj. It's all good, dude. I started trading the NASDAQ 100 futures, like the price action better than the S&P. Yeah, I mean, NASDAQ 100, much more volatile than the E-mini, though, so you just got to be careful. The NASDAQ 100 futures contract, the NQ, moves very, very quickly. Very, very quickly. So you just got to be careful because it's highly volatile. And, I mean, if you're trading futures, trade micros first, build up a cushion, and then once you have that cushion, use that cushion to swing larger with less risk. And so if you build up a cushion of $200, you can then scale up your size. And if you lose, then you're still break even. Say you lose $200, then you're flat. You scale back down in size, build up another cushion. If you lose, then you're small loss. But eventually, you're going to build up a cushion of $200. You're going to scale up your size. Then you're going to make $400. You'll be able to scale up your size again if you want and make $800. And that way, your risk is limited, but you have the potential for big reward days. Right, and that's the best risk management system you can build, in my opinion. But everybody's different, but that's what I usually kind of mirror with mine, is that type of risk management system. Because that way my losses are small, but my winning days are large, and so I can kind of rinse and repeat that. But it's also, like, a lot of trading is just learning not to trade on some days. Today, big tech day, a lot of choppiness in markets, especially at the open, so I've kind of avoided it, but yeah. Raj doesn't know the difference between your and your. Yeah. I mean, listen, Raj. Your without a your is possessive. You want to use the contraction you are. So apostrophe RE is what you want to use, brother. Hey, my guy, Mar, thanks so much for the dono, brother. Or for becoming a member, man. I appreciate it. Hey, nice beast mode. Your equals possessive. All right, let me help somebody out. I'm kind of like OCD with grammar. Your equals a contraction for you are. Mahogany John? I'm not pompous, dude. I mean, listen, I know when I look this good and I've got this beautiful office with all these books in it, you know what I mean? I mean, people are just going to hate. Like, listen, I get it, man. I'm here for it. Like, I'm going to start charging you guys as therapists here just to kind of let it out on my stream. Listen, tell me about it. I legit tapped a black belt in jiu-jitsu today, too. Y'all don't want to hear me start talking about that. I actually legit tapped a black belt in jiu-jitsu today. My coach. He might have been letting me work, but, like, I still got him. I'm really excited about it. It was an arm-out guillotine. I tried to shoot for the arm-in guillotine. He moved over to side control. I locked in the arm-out guillotine and caught him. We trade futures. We don't trade options. There you go, Dar, my guy. Beginner grammar coming soon. Hey, that's what I'm here for. If you're going to insult somebody, just listen. You better make sure you know the difference. Hey, Tiny. Hope you're doing good, Tiny. Good to see you. Yeah, we train. Like, I do a little bit of Muay Thai. I'm a white belt, so I'm a white belt, but I'm a good white belt, I think. Top 3 white belts in the world right now, I think. All right, we're at 153, 70s for Tesla. Let's see if it holds. 150's got to be a support level. Did you take over your dojo? Like Cobra Kai? My kids and I watch Cobra Kai together. Jiu-Jitsu white belts are different, though. All right? Like, listen, if I was doing karate, I'd probably be a black belt by now. You know? Jiu-Jitsu white belts have to train for years at white belt. It's not... In karate, they gift 12-year-olds black belts like it's some type of legit thing. Of course, they're not actual black belts. They're just nonsense. Like, jiu-jitsu's different. $150 support based on what? I'm not saying there is support. What I'm saying is that this is a psychological level. Just like $quarter, whole dollars, you know, just like $200 might be a psychological level. Again, it's nothing's definitive. I'm not saying it is. I think you could also look at like this level here. I'm just saying pay attention to it. We might bounce. I think you could also look at the upward angling trend line here. Like, look. I think that might be a thing too. You could call this a flag or whatever you want to call it, a wedge. But earnings are already out. Here's the earnings right here. Elon probably will talk. Do you feel it helps a lot with discipline and trading? Jiu-jitsu? No. No. Jiu-jitsu is kind of like chess, but it doesn't really have any type of like benefit to this. Might get you in better shape. Learn how to handle your emotions a little bit better, but I don't think so. I think all right, so the FTC has issued a final rule making it specifically illegal for bosses to make workers sign non-competes in any scenario and voiding nearly all existing non-compete clauses in contracts. Interesting. Yeah, I mean, it makes sense. I don't think, like... I'm okay, like, listen, I think it's okay to create rules around, like, okay, so, like, here's an example. If I have proprietary data that I use to profit from in my business, and somebody wants to work with me and I hire them, and they come in my business, learn all my proprietary data for a week, and then leave, that should be, like, they shouldn't be allowed to use my proprietary data when they just essentially stole it. Right now, that's still protected to a certain extent, but yeah, it's interesting. That's not the same thing as this, but it's close to it, so. Elon should talk, yes. Hey, my guy Sprite, thanks for the dono here. New here, I can't get over you're wearing a cap inside. I mean, I'll take my hat off. Look, I got the greatest hair of this generation right now. So I will take my hat off in a second. Definitely top 3 haircuts right now in all of the world. Say what one more time? Top 3 haircuts? Top 3 hairlines in the world. Look at this hairline, man. I'm in my 30s still. Great hairline. Tesla's still trying to hold. Usually non-competes in the solar world meant you couldn't talk to clients after you left the company. I still think that's probably a good move to have. Maybe I'm just like maybe I have my own business, so I understand the slippery slope that is, but I don't know. The non-compete. I don't know. I'm reading a Unusual Whales post. All right, so I'm reading an Unusual Whale post. Again, he said specifically, quote, the FTC just banned non-compete agreements according to More Perfect Union. The FTC has issued a final rule making it illegal for bosses to make workers sign non-competes in any scenario and voiding nearly all existing ones. yeah, I don't know. Do you agree with this? I don't know. There's people in the comments saying non-competes were an outrageous, unethical overreach of employers. It depends on in what context. If I have proprietary information and I don't want you to compete with me after you jump into my company and learn my proprietary information and then want to compete with me, I think that's fine to restrict. But I think the Supreme Court's going to be the final person here. Needs congressional approval, maybe. Top 3, maybe top 5 with support at 7. Definitely top 2.25, in my opinion, Sprite. But thanks for the dono, brother. I appreciate it. Yeah, I mean, I agree with something in terms like, okay. I think I agree, like, okay, if you work with a company and say you work in manufacturing, right? So say you work in manufacturing and you're with a company, right? And the company's not really treating you that well, but you're under a 2-year non-compete. Does that mean you can't leave that company and go work for another manufacturing company? It shouldn't. That's a ridiculous overstep, in my opinion. And in that regard, if it's in that context, get rid of it completely. That's ridiculous. Now, I think NDAs still need to be important so that you can't share information about my company with other companies or with whomever. But yeah, it depends on if it's in that context. If that's the context, 100% agree, get rid of them. Because again, you got to let people work. Like, it's not like if I get a master's degree in law and I sign a non-compete with a law firm, I can't leave that law firm and go work for another one for years. What is that supposed to do to me? Like, that's a ridiculous rule. And hopefully, if that is something that goes on right now, I haven't been in the corporate world in a long time, but if that is something that goes on right now, get freaking rid of it. I'm for it. Anyways, Tesla's still consolidating at this line here. Slightly underneath it. We'll see if it holds. Best channel broadcasting earnings. Hey, thanks, man. Hey, thanks, Tiny. Yeah, NDA is different for sure. And so NDAs still need to be a thing. Do theirs and where's? Well, what context theirs? THIER or THIR is possessive. But indirect possessive. There is location based. THERE is there, location based. Over there, over here, or right there. What's the other one? And then they are, THEY apostrophe RE is a contraction for they are. You're welcome, guys. Beginner grammar right here. Hey, we're at 155 for Tesla right now. We'll see if it holds. I'm quiet, but I F with you. Thanks, man. Hey, thanks, Jason. Appreciate it, man. Do you think Meta earnings will go well? I don't know. I'm in. I don't know if I'm. Yeah. So Meta up to $500 a share. Meta's had one of the craziest years for a stock outside of maybe Nvidia. Meta started the year off at 207s. A couple years ago, less than 2 years ago, I think. Let me see. Less than 2 years ago, Meta was at $89 a share. It's currently right around $500. Tesla moving up to test high, so I don't know about Meta. We'll see. I'm going to cover the earnings. We're going to stream it all live like we always do, though. We got this little flag on Tesla. We'll see if it holds. What is this thing? Oh, that's a candle wick. I didn't even realize that was a candle wick. I thought it was a line I drew. You have taught me so much. Hey, I'm here. Can you explain what an earnings call is? So every quarter, companies report financial earnings, like how well they do quarter to quarter, right? We're not talking about the specific quarter we're in. We're usually talking about the previous quarter that we were in. But I digress. Back to the point. Every quarter, companies report financial earnings. Some of them report them in the morning. Some of them report them in the evening. It varies. Tesla just reported theirs. Now, every time a company reports earnings, there's usually 2 phases of earnings. First one is the actual metrics released. So Tesla numbers are out. So we already know what Tesla did for their earnings. They posted 45-cent EPS, which is earnings per share. It's margins. It's specifically what Tesla did margin-wise per share, like how profitable the company is what EPS means. Higher is better, of course, and it's all based off of analyst expectations, which are basically other banks. Other banks are analyzing the stock and telling you what they think the numbers are going to show up as. The expectation was 51-cent profit per share. Tesla showed 45 cents, so a little bit under expected, worse than expected. Another metric they look at is revenue. That's kind of like the ceiling. That's the amount of money they're bringing in, not including expenses and margins and all that stuff. Again, Tesla revenue was $21.3 billion. A little bit under expected numbers. And then they have guidance, which is probably the most important one. It's future projections. But after a company reports earnings, they then follow it up with the company reports earnings. Usually they then do an earnings call about an hour later. So again, Tesla reported earnings at 4. They dropped their earnings call in about 45 minutes at 5:30. And so we're waiting. Usually the CEO can speak sometimes. So we got about 45 minutes left until the earnings come out. I mean, I think all tech moves with each other sick, but it varies. Those are the voting rights. He said, what are the difference between Google classes like Class A and Class C shares? That has to do with the voting rights and like the rights that the shareholders have, right? Like some classes of shares have better rights. Like they can vote, they can do these different things, versus other ones where they're just basically holding, a share or however many shares. So it depends on what type of share it is, but that has to do with voting, the rights the shareholders hold. That's the difference between like Class A, Class C. I'm trying to remember. I think Class A? I think Class C might be the better ones. Oh, Class A have more voting power and higher priority. And so the easier way to understand this is like Class B shares are common shares with no preferential treatment. C shares can refer to shares given to employees or alternate share classes available to public investors, right? So Class C shares are insider owned a lot of the time. Class B shares are just regular common shares. Class A shares have a little bit higher voting and priority. Tesla doesn't have a futures symbol, so there is no futures for individual single stocks. So if you ever hear the term quad witching day, what it refers to is a day of historical volatility in which all major contract types expire, right? So this used to include single stock futures, index futures, so like S&P 500 futures, right? Single stock options like Tesla options, or did I say single stocks? Or index options, right? So S&P 500 options, Tesla options, or single stock options. And so those are 4 major contract types. There's no longer such a thing as single stock futures. So you can't trade futures on individual companies anymore. You can only trade them on index funds and stuff like that. So it's technically triple witching day now, but they still call it quad witching day just because that's what they've always called it. All right, guys. Tesla up to 156 right now. Looking really, really nice. Yeah, I'm holding Tesla right now, Jay. Lots of great info. Thanks. All good. No worries. Can you comment a bit what happened so far with Tesla? So Tesla reported worse than expected EPS, worse than expected revenue, worse than expected guidance, and they gapped up. What is this? 3.5%. I'm trying to eyeball this percentage. Yeah, they're gapping up from 145 to 157. Okay, so I'm sorry, my percentage is way off. I got a headache right now, but it's 8.2%, so they're gapping up about 8%. I've got this really bad headache right now. I don't know what it is, if I'm staring at screens too much or what, but... I love you. Yeah, I did jiu-jitsu today. I got water. So I drank a lot of water for sure. I'm drinking a stevia cola, which has caffeine in it. Maybe this will help my headache. Stevia cola. Took a Tylenol. Hopefully it helps. Caffeine typically makes headaches go away, Jan. So... All right, when is Meta's earnings? Meta coming out earnings tomorrow. Freaking Pacific time. All right. All right, so it's a little bit better. Yeah, it's hard to tell. It's an acquired taste. They don't taste good. Stevia colas. Definitely don't get the Dr. Pepper clone. The Dr. Pepper clone is not good. You know, it tastes like cough syrup. So results are bad. Why does Tesla go up? Who can explain, please? I mean, I've already explained it a bunch, but again, it's important for people to understand, so I'll go ahead and go over it again. Tesla stock is up, even though they had bad earnings. Why is that? Number one, they could find investors and shareholders can be very, very thorough. They can find good things in earnings calls that other people might not necessarily see. That's the first reason it might be going up. The second reason is that results for earnings drop quarter to quarter, which means that people that wanted to bet on the long side for Tesla have already taken those positions. People that wanted to bet on short positions in Tesla have already taken those positions, as well as you have to include extension into the outlook. So even though Tesla had bad numbers, they weren't really bad. They were mostly flat, number one. And if you look at Tesla over the last 3 months, it's down a lot. And so extension on the downside, mostly flat numbers. The numbers weren't good, but they weren't super bad either. It's not like they came in way lower than expected. They were pretty neutral. And so just the extension on the downside mixed with that nuance means the stock price is going up. And again, this is something that we told people prior to the earnings coming out. We told people this exact thing might happen, where they might do better than or they might do worse than expected everywhere and still go up a certain percent. And again, that's exactly what happened. And so earnings are just not that predictable, right? And this is the first thing you understand. Listen, think about, I always use the same thought experiment. Think about how easy it would be to make money if all you had to do was sit around, wait for Tesla to report good numbers, and then click buy. Everybody would be rich. It's just not that easy. No efficient market is that easy. And so, yeah, you got to just understand it's not going to be that predictable. There's going to be a lot of nuance that goes behind earnings reactions. Most of it specifically has to do with the potential moves already baked in by now, you know? So people bought this months ago. And again, this might not hold. Sometimes the first move is the wrong move, but it is up a decent amount, so that's nice. Right, 50% off its 23 high, 70% from 21. Any result that was not completely disastrous was rewarded 100%, right? Stocks are not just going to go straight down. As much haters as Tesla gets, you have to consider extension here. You know, Tesla is still one of the largest successful companies in the world, sells tons of cars. I still see a lot of Teslas in my area. Every time I go outside, I see a Tesla. So it's just not... I get bears want to bet that stocks are just always going to drop. Again, I told somebody specifically like somebody, I'm not sure if you're still there, but somebody was like, hey, I bought this big position in put options ahead of this earnings call. And my response to him was that Tesla's down a lot. Like, that's a risky bet. You know, it's very possible Tesla, even if it reports bad numbers, which it did, goes up on this. And so, again, we were exactly right. And so that's what you got to understand. Like, if you have the itch to take a big gamble from earnings calls, please don't. It's there. The edge is so low. It's not like you're not going to have a crazy good edge taking big positions from earnings calls. Like, even, again, this shows you, even if you're right about what the earnings were, you still got to be right about the direction the stock goes and reacts to. So it's just a risky bet. You can react to the earnings like this, but trying to predict what it's going to be is a sucker's bet. It's something that, you know, for lack of, no offense to anybody at home, but rookie traders do. Or rookie traders are gamblers, like people that, again, would be paying roulette or something else if they weren't putting their money in the stock market. You got to understand, it's just a gamble. Do you think Tesla's going to drop again? It could. I don't know. Yeah, we're going to stream the whole earnings call live. We always do. It's about 35 minutes or so. Have you ever bought on earnings? Yeah. My favorite earnings play is this. All right. Typically, you get a company. Let me see if I can find one today that reported. So again, we had ENPH, which is energy. Yeah, so like my favorite earnings play is this. Is that you get a company that's otherwise healthy, has a huge negative reaction from earnings like Enphase here. Right? You get a company that's otherwise healthy with a huge negative reaction from earnings. It has to be blue chip healthy companies. I'm not going to do this with penny stocks because penny stocks aren't extended, they're weak. But I look for a healthy blue chip company that just overreacts to its earnings, whatever it is, has the big drop. I usually sit here and try to average in around here, and then I look for a nice little bounce back. I either sell it same day if it bounces back enough like this one would have. I didn't take this trade, but just giving you an example. Or I hold it for a few days, weeks, months, you know, turn it into a long-term investment with a really good entry is what I typically try to do. But yeah, that's my favorite earnings position, is to just look for overextension and reactions, especially on the downside. Downside is definitely easier to make money on than the upside. All right, guys, Tesla, again, chat, Tesla up to 159s right now, 159. So Tesla's still riding up here, breaking highs again. Yeah, I'm going to just get rid of this, all the lines here on the Tesla chart. We're going to look at it organically. With at least a year of experience, good traders don't play earnings. Yeah, most of them. Again, I'll buy some extension after pullbacks and stuff like that, but that's about it. What did y'all think about Devin Haney versus Ryan Garcia? Again, I see a lot of people making excuses for Haney. And again, I'm not even against Haney. I think Haney's a talented boxer, you know. I just think that, you know, I just think that Haney simply got beat up. And acting like Haney got anything but beat up is a completely ridiculous thing. You know, say what you want about Ryan Garcia, but he did that, and you got to give him credit for it. You know. I think the first knockdown changed the entire fight, 100%. It's something that you hear people say with Israel Adesanya a lot with Sean Strickland. Like, people say, oh, well, you know, Izzy had a bad game plan after the first round of the Sean Strickland fight. But, like, what people don't take into account is that Sean rocked Izzy. Izzy was on autopilot after the first round. Once you get a concussion like that, you know, you're not thinking right. Like, you're not thinking straight. Your game plan goes out the window. And you can't discredit Sean for that. Like, that's Izzy, you know, the same thing with Ryan Garcia. Yeah, a lot of people talking about Haney's chin. Yeah, I mean, Velen says, I like that investment style. Every time stocks go down for no reason, it's a good entry. It depends on how much and what kind of stocks. You know, penny stocks trick investors. Penny stocks are all crap. Like, they're terrible companies. None of them, like, are usually ever going to amount to anything big with a few outliers. But almost all of them are crap, right? Like, you hear people, again, I talked about this earlier. You hear people genuinely think that all stocks start off as penny stocks. Like, it's some life cycle of stocks. Like, they start off at penny stocks, they graduate to mid caps, they turn into blue chips, you know, like they're growing up. Like, no, most good companies never are penny stocks ever. They start out like Reddit recently IPO'd. It has never been below $37 since it IPO'd, right? So most healthy companies are never penny stocks. And so if somebody's trying to talk you into buying or investing in a penny stock, do not do it. Again, do whatever you want to do. Not an investment professional. I'm not liable if you lose, all that good stuff. Don't sue me, because I have no idea what I'm talking about. But again, penny stocks are crap. Most of them are just so sensationalized and marketed to traders who are just kind of oblivious to what it really is, that they just end up getting beat up in markets, man. They just lose. So just be smart, chat. Be smart. Strickland winning that was an anomaly. I don't know, man. Strickland has good striking. Strickland was competitive against Dricus. You know, it's not like he got destroyed. Dricus is the challenger. He's the champ right now. And so it's not like Strickland's a bad fighter. I think people just hate him. You know, I get it, like, to be honest, but yeah. In penny stocks, you have huge potential, though. I know, but again, that's like, okay, like, and again, Paul, it sounds like you're kind of wrapped up in the penny stock market. Again, just listen to what I'm about to say, okay, brother? Like, listen, I'm not here against you. Like, again, I've been there. I used to trade and invest in penny stocks. Like, I get it. Like, I really do. Just think about what I'm about to say, all right? Most blue chip healthy companies were never penny stocks. They immediately IPO in their mid caps, right? Playing penny stocks is like playing the slot machine or the lottery, right? And you're just burning money. Like, you're just wasting your money. Like, the worst game at a casino is the slot machine. Why? Because people think they can put a quarter in and win millions. And technically that's true. It's the same reason every Powerball talks about, we've got a 500 million Powerball, right? Like, the odds of winning that are so low, you're just burning money. And it's fine if you completely have money to lose, but the likelihood that you're going to make money is so low. It's so low. Like, it's not like penny stocks, it's not like you can even do DD, like due diligence about penny stocks, right? Most of the marketing is so sensationalized that you're never going to really be able to know the truth behind the company. You know, again, it's the Wolf of Wall Street. How did the Wolf of Wall Street get rich? He sold garbage to garbage men, was the quote that he used. Basically, he sold penny stocks to investors looking to get rich, right? Garbage to garbage men is the way he described it, because these are working class people. He's selling crap stocks to them. Same thing with penny stocks. You'll see a bunch of videos on YouTube saying this penny stock is going to 1000x or whatever they say. It's almost all crap. Like, again, worst companies you could ever invest in. You're just burning whatever money you put in them. And again, you got a lot of people selling courses on penny stocks. That market is very strong because they're making so much money selling courses on how to get rich in penny stocks. Again, you want to know the truth, follow big money. If you want to know what works and what doesn't, follow big money. Big money doesn't invest in penny stocks. They just don't. You wonder why? It's because they don't work. If penny stocks really had an edge, big money would do it, and they don't. And so just be smart, guys. Hey, we got 25 minutes. 25 minutes. I understand your point, but if you have low capital, you have to take some risks. Absolutely, Paul. And I think your point is actually a perfect, like, this is an argument that I tell people a lot, which is that most of the people that end up buying penny stocks, right, their logic is, hey, I've got a small account, right? Like, I've got a small account. You know, I'm here to tell you, listen, if you bought Meta a year and a half ago, you would be up so much money. If you bought 50 shares of Meta, you know, less than 5K, you're going to be up so much money right now. Like, you're going to be up 25, 30 grand in that stock right now, right? If you just bought Meta a couple years ago, you can buy a small amount of share size and make way more money and have much better returns than you're ever going to have in penny stocks, just buying less shares. Like, you're not going to be able to buy 50 shares, 100 shares of these tech stocks, but you can still get in them. And again, the edge is going to be so much higher. If it's something where you're trying to really make money, trying to roll the market in like that, like it's some type of get rich quick scheme, it's not. And anybody telling you is usually just trying to sell you a course. This is the truth, right? If you don't have that much money and you want to trade, right? Truly, if you don't have that much money and you want to trade, find a way to make more money. It's easier said than done, but like, spending money on starting another business is going to be much better spent than burning money in penny stocks trying to hit it big and get rich, like the lottery. Like, the lottery earns their living off of people hoping to get lucky and rich. You don't want to be that investor trader, you know. Again, I've been there. SoFi is not really a penny stock. It's got a larger cap, a larger float than that, but it's not a blue chip. That's for sure. What about the growing trend of shorting penny stocks? Well, you can't short most of them. Like, penny stocks, so like shorting anything is hard to do. You know, like if you look up, let me see if it has, you got to look at whether a company's ETB or HTB. ETB stands for easy to borrow. HTB stands for hard to borrow. NTB stands for nothing to borrow. Like, you can't short it. The reason you're not going to be able to short most penny stocks is because most penny stocks that are bad companies do not have shares available. Because what short traders are doing is short traders are borrowing the shares of long-term investors. And so there's a good video about this from somebody, I can't remember who, but shorting is like going to your neighbor and saying, hey, let me borrow a bag of sugar. And a bag of sugar costs 50 cents, right? So you say, hey, let me borrow a bag of sugar. You immediately sell it. Take the 50 cents, stick it in your pocket. You wait for the price of sugar to go up to $1. Wait. I'm getting my explanation wrong somewhere. Okay, yeah, that's right. So you go up to your neighbor, you borrow a bag of sugar, you immediately sell the sugar for $1 and wait for the price to drop to 50 cents, and then buy the bag of sugar back for 50 cents and return it to your neighbor and keeping the 50-cent difference. But you're doing this from long-term investors. And the big thing about penny stocks is there's not that many long-term investors willing to loan you shares. And so even if you find shortable stocks, it's risky. You're not going to really be able to do it. It's not going to be something you're going to consistently be able to do because they're not easy to borrow. You're going to have to pay obscene fees to locate them. It's just not going to work, you know. You could try to use Cobra or whatever and maybe find some good shorts, but it's going to be so difficult. You're going to be paying so much interest and fees to locate these shorts is probably not going to work. I mean, if I have 1 million, I wouldn't invest in penny stocks. I know, but no offense, man. That's kind of a... Look, I'm going to be as respectful. That's a sucker's mentality, Paul. Like, you don't need 1 million to invest in good stocks. Like, you just need 5K, 2K, 1K. You can invest in good stocks. That's like saying, hey, guys, like, I only have 500,000. Let me just blow it all on lottery tickets. You know? Silly. Yeah, so the countdown is when the earnings season actually starts. Is when the earnings call actually starts, is 5:30. And again, I'm doing this to try to help people. I might rant and about it. I'm really doing it to try to help people because I know there's some people that really just get ripped on the let's get rich investing in penny stocks crowd. And like, it's a sucker's bet, man. It's for rookie traders that don't know any better, that just get lost in that market hoping to hit it big on penny stocks. And it's just not going to happen. You know? Anyways, I'm in SoFi right now. SoFi is actually pretty green on the day, though. Speaking of penny stocks. Mullen. The shining light of the EV community. All right, chat. John has good intentions, provide good advice. Yeah. Earnings season starts. I mean, to be fair, this is the first major tech stock. Obviously, I recorrected myself and told you guys this is for when the earnings call starts. But again, if y'all want to hold that against me, it's all right. I'll let you. SoFi is not a blue chip. Them fighting words, bro. Listen, I said it, man. What's the market cap of SoFi? Market cap is $8 billion. It's a pretty small market cap for a blue chip, brother. You know, what is Nvidia market cap? 2 trillion. It's not a penny stock. What's the float of SoFi? SoFi's float's almost $1 billion, so it's not really a penny stock either. You know, penny stocks have low floats most of the time, so it's not really a penny stock either. I'd call it a mid cap personally. And again, if you really want to day trade, try a funded account program. Again, now most day traders lose. I'm always honest about this because it's the truth. Most day traders lose, right? So most people that try Apex are probably going to lose because most day traders lose in general. It's a lot cheaper to lose on Apex. What they do is they give you a demo and they test your skill in day trading. If you could pass the test, they fund you between 25K is the base one. It's only $30 for the base one, all the way up to 300K with a 90% split if you're funded. And again, most day traders lose. So even if you lose this, the base one's $30. It's not the end of the world. If you're good enough to pass it, you get a 90% split. And in the futures market, you can day trade short, buy market, very similar to day trading stocks. If you look at the futures contract for the NASDAQ 100, it's going to look a lot like Tesla chart. Like, look at this. Look how similar this looks to Tesla chart right now. So it's basically the same price action. It's not the same. This is the S&P, or this is the NASDAQ 100. This is basically the QQQ price action on this left side. But you can day trade this in futures, gold, S&P 500, basically the SPY. No PDT rule. So it's a great way to learn with less risk. Again, most people that day trade are going to lose. If you put up 5K to day trade, you're probably going to lose it. Let's be honest. And so it's a much cheaper way to do that, in my opinion. But again, they're a sponsor of mine. I'm biased because they pay me money. And so I'm definitely biased. You can use my promo code BT, Beginner Trading BT, 2 letters, get the max discount at all times. Always remember, I have no idea what I'm talking about. So by saying penny stocks, you mean bad companies or companies with low market cap. Okay. What's your favorite penny stock right now, Paul? Be honest. Don't look up a profitable penny stock and then throw that out there like you're invested in it just to prove your point. What's your favorite penny stock? An example of a penny stock is CEI. I would call a penny stock a low float stock under $10 is what I would call a penny stock. But again, you could also be talking about OTC pink sheets. Penny stocks, traders swap in penny stocks for a lot of different things. Mostly low float stocks under $5 is a penny stock. Soundhound's not a penny stock. I'm in Soundhound. This one's not really a penny stock either. Let me see. I don't know. You can look at the long-term trend. Most of them are going to have trends like this. CEI. This is a penny stock. Look at this chart. So futures are open not 24/7. I think you have to stop trading for now. It's only a day trading challenge, so you can only day trade. It's not for investing. AMC, I wouldn't really call it a penny stock, although it's kind of getting close. Long-term downtrend. I wouldn't really call this a penny stock. The float in the market cap is larger. What's market cap for AMC? All right, so less than $1 billion market cap for AMC. What's the float? 270 million. Yeah, I mean, AMC's close to one. It's not really one, I guess. Again, I'm talking about, like, let me find. Stockmarketwatch.com will give you a list of all the gappers. Look, here's some penny stocks. ATHE. Look at these charts. NCI, OCX, EQX. Basically, any company that claims to be changing the name MMAT. You know? Any company that claims to be changing the game for tech that is downtrending long term. Mostly penny stocks. Under $5. Under $10 maybe. SMFL, definitely one. All right, chat. Hey, we got 15 minutes left. 15 minutes left. I don't know. BB is arguable. I think BB's got a bigger cap, but I might be wrong. I don't know. I haven't looked at BlackBerry in a while. I saw the movie recently, though. Yeah, I would say anything with the market cap under 500 million and a float size under 200 million. That's under $10 is a penny stock. Blink BLNK is definitely a penny stock. Plug is one as well. Canada needs to send us some good actors again. My stepdad's Canadian. Shift the chart position above the headline banner. Fisker, I wouldn't really call one, but everybody's definition of penny stocks is different. Yeah, I mean, do your thing, Paul. I'm not mad at you. Just be careful. Like, look, you're going to be able to find mid caps, blue chips that are going to give you good returns and that have more edge than bottom feeding. I'm a bottom feeder by nature. I kind of do the same thing, but with blue chip stocks, Paul. One of my favorite strategies is I sit around looking for blue chip healthy companies to drop massive percentages short term. And then I buy them up and sit on them. I did this with Disney every time it dropped down to, every time Disney dropped down to 70, 80, or 80, $90 a share, I'd buy it up. I recently sold it at like 110, 115. I did this with Target. When Target dropped down to 100, I bought it up. A lot of people shamed me for it, made fun of me for it. And so I'm not saying that's not a viable strategy. I would just up the price of the stocks you're looking at, you know. Yeah, Visa, I mean, Visa killed it with earnings. They did great. Second quarter revenue, 8.8 billion. They expected 8.6, so better than expected EPS. 251 EPS versus 243, so better than expected everywhere for Visa. They did well. Gapping up to 281s right now, too. Here's Visa. Correct, Alexander. True margin for auto companies from parts, 100%. That's something a lot of people don't realize, but that's where they really make their money. Day trading futures, I do a little bit of everything. I scalp in the morning, build up a cushion, and then once I have a cushion, do longer term trend trades or sized up scalps. Yeah, so this is TOS. This is Thinkorswim, TD Ameritrade. In futures, I use Quant Tower and Apex. Do you live trade during Tesla earnings? No, probably not. I'm not going to mess with that. It's too risky. All right, Chad, we got 10 minutes. I don't really have a number one stock. Currently, my portfolio consists of Apple, AMC, Alibaba, Chewy, Delta, Etsy, Ford, Gold, GameStop, Google, Home Depot, Honeywell, Intel, Coca-Cola, MGM, Netflix, Nike, Pfizer, Palantir, Snapchat, Snowflake, SoFi, SoundHound, Tesla, Tyson Foods, Unity, Walgreens, and Walmart. Very green on this position today as well. We are up hundreds on these positions today, so those are nice. Again, though, we've limited, like, you're gonna see some speculatable companies here, but we ended up covering a lot of positions over the last few weeks to kind of limit our size into earnings season. We're very green on this portfolio as well. We're green on the year too, and so yeah. But we're still sitting on some of them, but we've limited our position. We had more than this. We basically had 30 plus positions we were in, and we kind of limited those. Oh, if Elon and Zuck fought, Zuckerberg would beat him up 100%. He just would. Mark trains Muay Thai, BJJ, you know. Doesn't matter who's bigger, you know. Yeah, we got a Discord. The Tesla chart is on the right straight. This is the right side right here. Is option trading better than CFDs or the same? I don't know about anything about CFDs. Hello? All right, sorry. Yeah, my daughter's not feeling good. She had the same thing I had like 3 weeks ago, man. Like, if you've been watching my stream long enough, you might remember. 3 weeks ago, dude, whatever I had freaking sucked, man. I don't know what it was. I don't know what I had. I did a C-word test, a flu test, and everything, a strep test. It was all negative. But whatever it was, man, it was one of those things, like, you ever wake up in the middle of the night and you're legit scared to swallow because your throat hurts so much? That's what it was. I had to, like, stay on cough drops. My daughter now has the same thing. What's weird is that the incubation time must have been a long time, because it was like 2.5 weeks, 3 weeks ago. No, I guess you could have caught it from somebody else. Yeah, so again, yeah, it was whatever it was sucked. It wasn't strep. I've actually had my tonsils taken out when I was young because of strep. My mom was a teacher, and so by the time I was like 12, like this was back in the day when they gave you a shot, they were giving you a straight penicillin shot in your leg, dude. I used to like literally fight the doctors, you know. They're lucky I didn't know jiu-jitsu back then when I was 10, because I used to legit fight these doctors. Like, they wanted to give me a shot in my leg. Every single time I saw them, I'd have strep throat. Eventually, my mom was probably a carrier, they think, for strep. She was a teacher, and so she was around a bunch of kids. But yeah, this was before they gave you antibiotics. They just gave me a penicillin shot, and I used to hate it. I would wrestle those doctors, man. Anyways, they eventually took my tonsils out, so I got strep throat less. But I still got it since then. It still didn't stop it, to be honest, but get it less for sure. Look, I'll put Tesla chart on both the left and right. We'll put a 5-minute chart on the left, and then a 1-minute chart on the right, so that we got 2 charts for Tesla up. All right, chat, we got about 4 minutes. All right, chat, here we go. You guys ready for Tesla earnings? It's time. All right, guys, we got 4 minutes. 4 minutes. All right, so we got a couple different sources for this earnings call, so we can make sure we get you guys with the best one. All right, chat. 3 minutes here, 3 minutes. So again, we got a couple different sources up. We want to make sure you get this as soon as we can. So I'm gonna mute the music. Also, I gotta switch my headphones out too. Let me know if y'all can hear the music right now. 2 minutes until the Tesla earnings call drops in about 3 minutes. Really about 3 minutes, but it's all right. People finance cars and rates makes it unaffordable. Yeah, but buying a brand new car is one of the worst decisions you can make financially, especially if you finance it. Buying a new car is fine if you have FU money or you have some type of money where you don't really worry about it. But if you make 50K a year, 60K a year, anything under 100K, and you finance a new car, a brand new car, you're going to depreciate so much driving off the lot. You're going to be locked in long-term debt on a wildly depreciating asset. It's one of the worst things you could ever do. Buy a used car. Put your ego aside and buy a used car, chat. Like, that's the move. Like, don't buy a brand new car if you make less than 100K. Yeah, we're gonna turn the music off. Y'all can hear the music, yes? Okay, good. All right, so I'm also gonna mute the music for now until we get the call ready. We got the call ready. We're waiting. We got Elon's bad music up though, but that's all right. It's not good music, but that's okay. Yeah. Alright, so we'll get this timer up. Again, we got about a minute left, chat. 1 minute left. This timer's a little bit late, but we'll move it and so you can see all of it. Alright, chat. Let's do this. I like crypto. We have a crypto YouTube channel. So we love crypto. Alright, chat. 45 seconds. We're on Tesla's really bad hold call, but that's alright. Okay. Sorry, we're testing the hold music. Alright, guys, here we go. We're waiting. We're going to let you guys know when it comes on. It's coming on pretty soon, chat, so just be careful. Waiting for the earnings call to start. Again, again, we're waiting here, chat. Again, subscribe to chat. We're going to be in sub-only mode when it goes live. Again, we're in live right now. Just kind of waiting here. It better not be in another freaking hour. It's not, though. Is Elon going to dance? I don't know. All right.
Q&A webcast. My name is Martin Vieca, VP of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Martin. So to recap, in Q1, we navigated several unforeseen challenges as well as the ramp for the updated Model 3 in Fremont. There was, as people have seen, the EV adoption rate globally is under pressure, and a lot of other auto manufacturers are pulling back on EVs and pursuing plug-in hybrids instead. We believe this is not the right strategy, and electric vehicles will ultimately dominate the market. Despite these challenges, the Tesla team did a great job executing in a tough environment. and energy storage deployments, the Megapack in particular, reached an all-time high in Q1, leading to record profitability for the energy business. And that looks likely to continue to increase in the quarters and years ahead. It will increase. We actually know that it will. Significantly faster than the car business, as we expected. We also continue to expand our AI training capacity in Q1, more than doubling our training compute sequentially. In terms of the new product roadmap, there's been a lot of talk about our upcoming vehicle line in the past several weeks. We've updated our future vehicle lineup to accelerate the launch of new models ahead of previously mentioned start of production in the second half of 2025. So we expect it to be more like the early 2025, if not late this year. These new vehicles, including more affordable models, will use aspects of the next generation platform, as well as aspects of our current platforms, and will be able to be produced on the same manufacturing lines as our current vehicle lineup. So it's not contingent on any new factory or massive new production line. It'll be made on our current production lines much more efficiently. And we think this should allow us to get to over 3 million vehicles of capacity when realized to the full extent. Regarding FSD version 12, which is the pure AI-based self-driving, people that if you haven't experienced this, I strongly urge you to try it out. It's profound, and the rate of improvement is rapid. So we've now turned that on for all cars with the cameras and inference computer and everything from hardware 3 on in North America. So it's been pushed out to, I think, around 1.8 million vehicles, and we're seeing about half of people use it so far, and that percentage is increasing with each passing week. So we now have over 300 billion miles that have been driven with FSD V12. Since the launch of full self-driving, supervised full self-driving, it's become very clear that the vision-based approach with end-to-end neural networks is the right solution for scalable autonomy. And it's really how humans drive. Our entire road network is designed for biological neural nets and eyes. So naturally, cameras and digital neural nets are the solution to our current road system. To make it more accessible, we've reduced the subscription price to $99 a month, so it's easy to try out. And as we've announced, we'll be showcasing our purpose-built robotaxi or cybercab in August. Regarding AI compute, over the past few months, we've been actively working on expanding Tesla's core AI infrastructure. For a while there, we were training constrained in our progress. We are, at this point, no longer training constrained, and so we're making rapid progress. We've installed and commissioned, meaning they're actually working, 35,000 H100 computers or GPUs. GPU is the wrong word. They need a new word. I always feel like a wince when I say GPU because it's not GPU stands for G stands for graphics and doesn't do graphics. But anyway, roughly 35,000 H100s are active, and we expect that to be probably 85,000 or thereabouts by the end of this year. In training, just for training. We are making sure that we're being as efficient as possible in our training. It's not just about the number of H100s, but how efficiently they're used. So in conclusion, we're super excited about our autonomy roadmap. I think it should be obvious to anyone who's driving version 12 in a Tesla that is only a matter of time before we exceed the reliability of humans, and not much time at that. And we're really headed for an electric vehicle, an autonomous future. And I'll go back to something I said several years ago, that in the future, gasoline cars that are not autonomous will be like riding a horse and using a flip phone. And that will become very obvious in hindsight. We continue to make the necessary investments that will drive growth and profits for Tesla in the future. And I wanted to thank the Tesla team for incredible execution during this period and look forward to everything that we have planned ahead. Thanks.
Thank you very much. And Vaibhav has some comments as well.
Thanks. It's important to acknowledge what Elon said. From our auto business perspective, we did see a decline in revenues quarter over quarter, and those were primarily because of seasonality, uncertain macroeconomic environment, and the other reasons which Elon had mentioned earlier. Auto margins declined from 18.9% to 18.5%, excluding the impact of Cybertruck. The impact of pricing actions was largely offset by reductions in per unit cost and the recognition of revenue from auto park feature for certain vehicles in the US that previously did not have that functionality. Additionally, while we did experience higher costs due to the ramp of Model 3 in Fremont and disruptions in Berlin, these costs were largely offset by cost reduction initiatives. In fact, if we exclude Cybertruck and Fremont Model 3 ramp costs, the revenue from auto park auto margins improved slightly. Currently, normalized Model Y cost per vehicle in Austin and Berlin are already very close to that of Fremont. Our ability to reduce costs without sacrificing on quality was due to the amazing efforts of the team in executing Tesla's relentless pursuit of efficiency across the business. We've also witnessed that as other OEMs are pulling back on their investments in EV, there is increasing appetite for credits, and that means a steady stream of revenue for us. Obviously, seeing others pull back from EV is not the future we want. We would prefer it the whole industry went all in. On the demand front, we have undertaken a variety of initiatives, including lowering the price of both the purchase and subscription options for FSD, launching extremely attractive leasing specials for the Model 3 in the US for $299 a month, and offering attractive financing options in certain markets. We believe that our awareness activities paired with attractive financing will go a long way in expanding our reach and driving demand for our products. Our energy business continues to make meaningful progress with margins reaching a record of 24.6%. We expect the energy storage deployments for 2024 to grow at least 75% higher from 2023. And accordingly, this business will begin contributing significantly to our overall profitability. Note that there is a bit of lumpiness in our storage deployments due to a variety of factors that are outside of our control, so deployments may fluctuate quarter over quarter. On the operating expense front, we saw a sequential increase from our AI initiatives, continued investment in future projects, marketing, and other activities. We had negative free cash flow of $2.5 billion in the first quarter. The primary driver of this was an increase in inventory from a mismatch between builds and deliveries, as discussed before, and our elevated spend on CapEx across various initiatives, including AI compute. We expect the inventory build to reverse in the second quarter and free cash flow to return to positive again. As we prepare the company for the next phase of growth, we had to make the hard but necessary decision to reduce our headcount by over 10%. The savings generated are expected to be well in excess of $1 billion on an annual run rate basis. We are also getting hyper-focused on CapEx efficiency and utilizing our installed capacity in a more efficient manner. The savings from these initiatives, including our cost reductions, will help improve our overall profitability and ultimately enable us to increase the scale of our investments in AI. In conclusion, the future is extremely bright, and the journey to get there, while challenging, will be extremely rewarding. Once again, I would like to thank the whole Tesla team for delivering great results, and we can open it up to Q&A.
Thank you. Okay, let's start with investor Q&A. The first question is, what is the status of 4680? What is the current output? Lars?
Sure. 4680 production increased about 18-20% from Q4, reaching greater than 1K a week for Cybertruck, which is about 7 gigawatt hours per year, as we posted on X. We expect to stay ahead of the Cybertruck ramp with the cell production throughout Q2 as we ramp the third of 4 lines in phase 1. while maintaining multiple weeks of cell inventory to make sure we're ahead of the ramp. Because we're ramping, COGS continues to drop rapidly week over week, driven by yield improvements throughout the lines and production volume increases. So our goal, and we expect to do this, is to beat supplier costs of nickel-based cells by the end of the year.
Thank you. The second question is on Optimus. So what is the current status of Optimus? Are they currently performing any factory tasks? When do you expect to start mass production?
We are able to do simple factory tasks, or at least I should say factory tasks in the lab. In terms of actually, we do think we will have Optimus in limited production in the factory, in the actual factory itself, doing useful tasks before the end of this year. And then I think we may be able to sell it externally by the end of next year. These are just guesses. As I've said before, I think Optimus will be more valuable than everything else combined. Because if you've got a sentient humanoid robot that is able to navigate reality and do tasks at request, there is no meaningful limit to the size of the economy. So that's what's going to happen. And I think Tesla is best positioned of any humanoid robot maker to be able to reach volume production with efficient inference on the robot itself. This perhaps is a point that is worth emphasizing. Tesla's AI inference efficiency is vastly better than any other company. No, there's no company even close to the inference efficiency of Tesla. We've had to do that because we were constrained by the inference hardware in the car. We didn't have a choice. But that will pay dividends in many ways.
Thank you. The third question is, what is Tesla's current assessment of the pathway towards regulatory approval for unsupervised FSD in the US? And how should we think about the appropriate safety threshold compared to human drivers?
Sure. I can start. There are a handful of states that already have adopted autonomous vehicle laws. These states are paving the way for operations, while the data for such operations guides a broader adoption of driverless vehicles. I think Ashok can talk a little bit about our safety methodology, but we expect that these states and the work ongoing, as well as the data that we're providing, will pave the way for a broad-based regulatory approval in the US at least, and then other countries as well.
Yeah. It's actually been pretty helpful that other autonomous car companies have been cutting a path through the regulatory jungle. That's actually quite helpful. And they have obviously been operating in San Francisco for a while. I think they got approval for City of LA. So these approvals are happening rapidly. I think if you've got at scale a statistically significant amount of data that shows conclusively that the autonomous car has, let's say, half the accident rate of a human-driven car, I think that's difficult to ignore, because at that point, stopping autonomy means killing people. So I actually do not think that there will be significant regulatory barriers, provided there is conclusive data that the autonomous car is safer than a human-driven car. And in my view, this will be much like elevators. Like, elevators used to be operated by a guy with a relay switch, but sometimes that guy would get tired or drunk or just make a mistake and shear somebody in half between floors. So now we just get in an elevator and press a button. We don't think about it. In fact, it's kind of weird if somebody's standing there with a relay switch. That'll be how cars work. You just summon a car using your phone. You get in, it takes you to a destination, you get out.
You don't even think about it.
You don't even think about it. Just like an elevator. It takes you to your floor. That's it. Don't think about how the elevator is working or anything like that. Now, something I should clarify is that Tesla will be operating the fleet. So you can think of like how Tesla, think of Tesla like, I don't know, some combination of Airbnb and Uber, meaning that, there'll be some number of cars that Tesla owns itself and operates in the fleet. There'll be some number of cars, and then there'll be a bunch of cars where they're owned by the end user, but that end user can add or subtract their car to the fleet whenever they want. And they can decide if they want to only let the car be used by friends and family, or only by 5-star users, or by anyone. And at any time, they could have the car come back to them and be exclusively theirs, like an Airbnb. You could rent out your guest room or not anytime you want. So as our fleet grows, we have 7 million cars, 9 million cars, eventually tens of millions of cars worldwide. With a constant feedback loop, every time something goes wrong, that gets added to the training data, and you get this training flywheel happening in the same way that Google search has the sort of flywheel. It's very difficult to compete with Google because people are constantly doing searches and clicking, and Google's getting that feedback loop. It's the same with Tesla, but at a scale that is maybe difficult to comprehend, but ultimately be tens of millions. I think there's also some potential here for an AWS element down the road, where if we've got very powerful inference, because we've got a hardware 3 in the cars, but now all cars are being made with hardware 4. Hardware 5 is pretty much designed and should be in cars hopefully towards the end of next year. And there's a potential to have to run, when the car is not moving, to actually run distributed inference. So kind of like AWS, but distributed inference. Like, it takes a lot of computers to train an AI model, but many orders of magnitude less compute to run it. So if you can imagine a future perhaps where there's a fleet of 100 million Teslas, and on average they've got like maybe a kilowatt of inference compute, that's 100 gigawatts of inference compute distributed all around the world. It's pretty hard to put together 100 gigawatts of AI compute. And even in an autonomous future where the car is perhaps used, instead of being used 10 hours a week, is used 50 hours a week, that still leaves over 100 hours a week where the car inference computer could be doing something else. And it seems like it would be a waste not to use it.
Asher, do you want to chime in on tier process and safety?
Yeah, we have like multiple tiers of validating the safety. For like in any given week, we train hundreds of neural networks that can produce different trajectories for how to drive the car. We replay them through the millions of clips that we have already collected from our users and our own QA. Those are like critical events, like someone jumping out in front, or like other critical events that we have gathered a database over many, many years. And we replay through all of them to make sure that we are net improving safety. And on top of it, we have simulation systems that also try to recreate this and test this in closed loop fashion. Once all of this is validated, we give it to our own QA drivers. We have hundreds of them in different cities, in San Francisco, Los Angeles, Austin, New York, a lot of different locations. They are also driving this and collecting real world miles. And we have an estimate of what are the critical events. Are they a net improvement compared to the previous week's builds? And once we have confidence that the build is a net improvement, then we start shipping to early users, like 2,000 employees initially, that they would like get the build. They would give feedback on like if it's an improvement, or are they noticing some new issues that we did not capture in our own QA process. And only after all of this is validated, then we go to external customers. And even when we go external, we have like live dashboards of monitoring every critical event that's happening in the fleet, sorted by the criticality of it. So we are having a constant pulse on the build's quality and the safety improvement along the way. And then any failures, like Elon alluded to, you get the data back, add it to the training, and that improves the model in the next cycle. So we have this like constant feedback loop of issues, fixes, evaluations, and then rinse and repeat. And especially with the new V2 architecture, all of this is automatically improving without requiring much engineering interventions, in the sense that engineers don't have to be creative in like how they code the algorithms. It's mostly learning on its own based on data. So you see that, okay, we failed here, or like this is how a person shows, this is how you drive this intersection or something like that. We get the data back, we add it to the neural network, and it learns from that training data automatically, instead of some engineers saying that, oh, here you must rotate the steering wheel by this much or something like that. There's no hard if-else conditions. It's everything is neural network. It's very soft. It's probabilistic. So it will adapt its probability distribution based on the new data that it's getting.
Yeah, and we do have some insight into how good the things will be in, like, let's say 3 or 4 months, because we have advanced models that are far more capable than what is in the car. But have some issues with them that we need to fix. So there'll be a step change improvement in the capabilities of the car, but it'll have some quirks that are that need to be addressed in order to release it. As Ashok was saying, we have to be very careful in what we release to the fleet, or to customers in general. So like if we look at say 12.4 and 12.5, which are really could arguably even be version 13 and version 14, because it's pretty close to a total retrain of the neural nets in each case, or substantially different. So we have good insight into where the models, how well the car will perform in say 3 or 4 months.
Yeah, in terms of scaling laws, people in the AI community generally talk about model scaling laws, where they increase the model size a lot, and then they have corresponding gains in performance. But we have also figured out scaling laws in other axes. In addition to the model size scaling, we can also have data scaling. You can increase the amount of data you use to train the neural network, and that also gives similar gains. And you can also scale up by training compute. You can train it for much longer and get on more GPUs or more Dojo nodes, and that also gives better performance. And you can also have architecture scaling, where you come up with better architectures that for the same amount of compute produce better results. So a combination of model size scaling, data scaling, training compute scaling, and the architecture scaling, we can basically if we continue scaling based on this ratio, we can sort of predict future performance. Obviously, it takes time to do the experiments, because it takes few weeks to train. It takes few weeks to collect tens of millions of video clips and process all of them. But you can estimate what's going to be the future progress based on the trends that we have seen in the past, and they've generally held true based on the past data.
Okay, thank you very much. Let's go to the next question, which is, can we get an official announcement of the timeline for the $25,000 vehicle?
I think Elon mentioned it in the opening remarks, but as you mentioned, we're updating our future vehicle lineup to accelerate the launch of our low-cost vehicles in a more CapEx efficient way. That's our mission, to get the most affordable cars to customers as fast as possible. These new vehicles we built on our existing lines and open capacity, and that's a major shift, to utilize all our capacity with marginal CapEx before we go spend high CapEx to do anything.
Yeah, we'll talk about this more on August 8th. But really the way to think of Tesla is almost entirely in terms of solving autonomy and being able to turn on that autonomy for a gigantic fleet. And I think it might be the biggest asset value appreciation in history when that day happens, when you can do unsupervised full self-driving.
5 million cars.
Yeah.
Well, a little less.
Well,
Some of those have yeah.
It'll be 7 million cars, in a year or so.
Yeah.
And then 10 million, and then eventually we're talking about tens of millions of cars. Not eventually, it's like before the end of this decade. Yeah, before the end of the decade, it's several tens of millions of cars, I think.
Thank you. The next question is, what is the progress of Cybertruck ramp?
I can take that one too. Cybertruck hit 1K a week just a couple weeks ago. This happened in the first 4 to 5 months since we SOP'd late last year. Of course, volume production is what matters. That's what drives costs, and so our costs are dropping. But the ramp still faces like a lot of challenges with so many new technologies, some supplier limitations, et cetera, and we'll continue to ramp this year, just focusing on cost efficiency and quality.
Okay, thank you. The next question, have any of the legacy automakers contacted Tesla about possibly licensing FSD in the future?
We're in conversations with one major automaker regarding licensing FSD.
Thank you. The next question is about the robotaxi unveil. Elon already talked about that, so we'll have to wait till August. The following question is about the next generation vehicle. We already talked about that. So let's go to the Semi. What is the timeline for scaling Semi? I think
Sure. So we're finalizing the engineering of the Semi to enable like a super cost-effective, high-volume production with our learnings from our fleet and pilot, our pilot fleet and Pepsi's fleet, which we're expanding this year marginally. In parallel, as we showed in the shareholders deck, we have started construction on the factory in Reno. Our first vehicles are planned for late 2025 with external customers starting in 2026.
Okay, couple more questions. So our favorite, can we make FSD transfer permanent until FSD is fully delivered with level 5 autonomy?
No.
Okay, next question. What is gating the production ramp at Lathrop? Where do you see the Megapack run rate at the end of the year? Mike?
Yeah, Lathrop is ramping as planned. We have our second GA line allowing us to increase our exit rate from 20 gigawatt hours per year to, at the start of this year, to 40 gigawatt hours per year by the end of the year. That line's commissioned. There's really nothing limiting the ramp. It's given the longer sales cycles for these large projects, we typically have order visibility 12 to 24 months prior to ship dates. So we're able to plan the build plan several quarters in advance. So this allows us to ramp the factory to align with the business and order growth. Lastly, we'd like to thank our customers globally for their trust in Tesla as a partner for these incredible projects.
Okay, thank you very much. Let's go to analyst questions. The first question comes from Tony Sacconaghi from Bernstein. Tony, please go ahead and unmute.
Thank you for taking the question. I was just wondering if you could elaborate a little bit more on kind of the new vehicles that you talked about today. Are these like tweaks on existing models, given that they're going to be running on the same lines, or are these like new models? And how should we think about them, in the context of like the Model 3 Highland update? What will these models be like relative to that? And given the quick time frame, Model 3 Highland has required a lot of work and a lot of retooling. Maybe you can help put that all in context. Thank you. And I have a follow-up, please.
I think we've said all we will on that front. So what's your follow-up?
It's a more personal one for you, Elon, which is that you're leading many important companies right now. Maybe you can just talk about where your heart is at in terms of your interests, and do you expect to lessen your involvement with Tesla at any point over the next 3 years?
Well, Tesla constitutes the majority of my work time, and I work pretty much every day of the week. It's rare for me to take a Sunday afternoon off. So I'm going to make sure Tesla is very prosperous, and it is. I think it is prosperous, and it will be very much so in the future.
Okay, thank you. Let's go to Adam Jonas from Morgan Stanley. Adam, please go ahead and unmute.
Okay, great. Hey, Elon. So you and your team on volume expect a 2024 growth rate notably lower than that achieved in 2023. But what's your team's degree of confidence on growth above 0%? Or in other words, does that statement leave room for potentially lower sales year on year?
No, I think we'll have higher sales this year than last year.
Okay. My follow-up, Elon, on future product. If you had nailed execution, assuming that you nail execution on your next gen, cheaper vehicles, more aggressive giga castings, I don't want to say one piece, but getting closer to one piece, structural pack, unboxed, 300-mile range, $25,000 price point. Putting aside robotaxi, those features unique to you, how long would it take your best Chinese competitors to copy a cheaper and better vehicle that you could offer a couple of years from now? How long would it take your best Chinese competitors to copy that? Thanks.
I mean, I don't know what our competitors could do, except we've done relatively better than they have. If you look at the drop in our competitors in China sales versus our drop in sales, our drop was less than theirs. So we're doing well. But I think Kathy Wood said it best. Like, really, we should be thought of as an AI or robotics company. If you value Tesla as just like an auto company, you just have to fundamentally. It's just the wrong framework, and it will come to be. If you ask the wrong question, then the right answer is impossible. So. I mean, if somebody doesn't believe Tesla's going to solve autonomy, I think they should not be an investor in the company. Like that is, but we will, and we are. And then you have a car that goes from 10 hours of use a week, like an hour and a half a day, to probably 50, but it costs the same.
I think that's the key thing to remember, right? Especially if you look at FSD supervised. If you didn't believe in autonomy, they should give you a preview that this is coming. It's actually getting better day by day.
Yeah, if you've not tried the FSD 12.3, and like I said, 12.4 is going to be significantly better, and 12.5 even better than that, and we have visibility into those things, then you really don't understand what's going on. It's not possible.
Yeah, and that's why we can't just look at just as a car company, because a car company would just have a car. But here we have more than a car company because the cars can be autonomous. And like I said, it's happening.
Yeah, this is all in addition to Tesla working. The overall AI community is just like improving rapidly. Yeah.
Yeah, I mean, we're putting the actual auto in automobile. So, so sort of a lot of we go like, well, sort of like, tell us about future horse carriages you're making. I'm like, well, actually, it doesn't need a horse. That's the whole point. And that's really the whole point.
Okay, thank you. The next question comes from Alex Potter from Piper Sandler. Alex, please go ahead and unmute.
Great, thanks. So couldn't agree more. The thesis hinges completely on AI, the future of AI, full self-driving, neural net training, all of these things. In that context, Elon, you've spoken about your desire to obtain 25% voting control of the company. And I understand completely why that would be. So I'm not necessarily asking about that. I'm asking if you've come up with any mechanism by which you can ensure that you'll obtain that level of voting control, because if not, then the core part of the thesis could potentially be at risk. So any additional commentary you might have on that topic?
Well, I think no matter what, Tesla, even if I got kidnapped by aliens tomorrow, Tesla will solve autonomy, maybe a little slower, but it would solve autonomy for vehicles at least. I don't know if it would win on with respect to Optimus or with respect to future products, but it would. But there's enough momentum for Tesla to solve autonomy, even if I disappeared for vehicles. Now, there's
Okay.
a whole range of things we can do in the future beyond that. I'd be more reticent with respect to Optimus. If we have a super sentient humanoid robot that can follow you indoors and that you can't escape, we're talking Terminator level risk. then yeah, I'd be uncomfortable with, if there's not some meaningful level of influence over how that is deployed. If there's, shareholders have an opportunity to ratify or re-ratify the sort of competition. I guess I can't say that. Whatever, but that is a fact. They have an opportunity.
Okay. Very good.
And yeah, we'll see. If the company generates a lot of positive cash flow, we could obviously buy back shares.
All right, that's actually all very helpful context. Thank you. Maybe one final question, then I'll pass it on. OpEx reductions. Thank you for quantifying the impact there. I'd be interested also in potentially more qualitative discussion of what the implications are for these headcount reductions. What are the types of activities that you're presumably sacrificing as a result of parting ways with these folks? Thanks very much.
So, like we said, we've done these headcount reductions across the board. And, as companies grow over time, there are certain redundancies, there's some duplication of efforts which happens in certain areas. So you need to go back and look at where all these pockets are, get rid of it. So we're basically going through that exercise wherein we're like, hey, how do we set this company right for the next phase of growth? And the way to think about it is, any tree which grows, it needs pruning. This is the pruning exercise which we went through. And at the end of it, we'll be much stronger and much more resilient to deal with the future, because the future is really bright. Like I said in my opening remarks, we just have to get through this period and get there.
Yeah, we're not giving up anything that it's significant that I'm aware of. So we've had a long period of prosperity from 2019 to now, and so if a company sort of organizationally is 5% wrong per year, that accumulates to 25-30% of inefficiency. We've made some corrections along the way, but it is time to reorganize the company for the next phase of growth. And you really need to reorganize it, just like a human. When we start off as one cell and become a zygote and blastocyst, and you start growing arms and legs, and briefly you have a tail. And so.
But you shed the tail.
You shed the tail, hopefully, and then you're a baby. And you basically you have to be different. The organism, a company is kind of like a creature growing, and if you don't reorganize it for different phases of growth, it will fail. You can't have the same organizational structure if you're 10 cells versus 100 versus 1 million versus 1 billion versus 1 trillion. Where humans are like around 35 trillion cells. It doesn't feel like it. Feels like feel like one person, but you're basically a walking cell colony of roughly 35 trillion, depending on your body mass, and about 3 times that number in bacteria. So anyway, you've got to reorganize the company for a new phase of growth, or it will fail to achieve that growth.
Thank you. Let's go to Mark Delaney from Goldman Sachs. Mark, please go ahead and unmute.
Yes, good afternoon. Thanks very much for taking the question. The company had previously characterized potential FSD licensing discussions as in the early phase, and some OEMs had not really been believing in it. Can you elaborate on how much the licensing business opportunity you mentioned today has progressed? And is there anything Tesla needs to achieve with the technology in terms of product milestones in order to be successful at reaching a licensing agreement, in your view?
Well, I think it just needs to be obvious that our approach is the right approach. And I think it is. I think we're now with 12.3. If you just have the car drive you around, it is obvious that our solution, with a relatively low cost inference computer and standard cameras, can achieve self-driving. No LiDARs, no radars, no ultrasonics, nothing. Just
no heavy integration work for the vehicle manufacturers.
yeah, it's so it would really just be a case of having them use the same cameras and inference computer and licensing our software. And but it's once it becomes obvious that if you don't have this in a car, nobody wants your car.
Yeah,
It's like it's a smart car. I just remember like back when Nokia was king of the hill. Yeah,
Dominating the cell phone industry.
yeah, crushing. And I saw them come out with a smartphone that was basically a brick with limited functionality. And then the iPhone and Android. But people still did not understand that all the phones are going to be that way. There's not going to be any flip phones. There'll be a niche product.
Or home phones.
Yeah, not even exactly. When was the last time you saw a home phone? Is it like an
I have no idea.
Yeah.
In a hotel. Sometimes in a hotel.
Yeah, the hotels have them. Yeah. So if people don't understand, all cars will need to be smart cars, or you will not sell the car. Will not. Nobody will buy it. Once that becomes obvious, I think licensing becomes not optional.
Becomes a method of survival.
Yeah, so it's license it or nobody will buy your car.
I mean, one other thing which I'll add is in the conversations which we've had with some of these OEMs, I just want to also point out that they take a lot of time in their product life cycle.
Yeah.
They're talking about years before they will, put it in their product. We might have a licensing deal earlier than that, but it takes a while. So this is where the big difference between us and them is, right?
Yeah, I mean, really, a deal signed now would result in it being in a car in probably 3 years.
That would be early.
Yeah, that's like lightning, basically. So
that's being an eager OEM.
Yeah. So, I mean, I wouldn't be surprised if we do sign a deal. I think we're good chance we do sign a deal this year. Maybe more than one. But yeah, it would be probably 3 years before it's integrated with a car, even though all you need is cameras and our inference computer. So it's like not a massive design change.
Yeah, and again, just to clarify, it's not the work which we have to do, it's the work which they have to do, which will take the time.
Right, Mark, do
Very
you have a follow-up?
Yeah, very helpful. Thank you. My follow-up was to better understand Tesla's approach to pricing going forward. Previously, the company had said that the price reductions were driving incremental demand. With how affordable the cars have become, especially for vehicles that have access to IRA credits and some of the leasing offers that Tesla has in place, do you still see meaningful incremental price reductions as making sense from here for the existing products? And can the company meaningfully lower prices from here and also stay free cash flow positive on an annual basis with the current product set? Thanks.
Yeah, I think we can be free cash flow positive meaningfully. Yeah.
I think Vaibhav said it in his opening remarks, like our cost down efforts, we basically were offsetting the price cuts.
That's what I was going to say.
Goal. Like we're trying to give it back to the customers.
Yeah, I mean, at the end of the day, like for any given company, if you sell a great product at a great price, if you have a great product at a great price, the sales will be excellent.
Mm-hmm.
That's true of any arena. So over time, we do need to keep making sure that that it's a great product at a great price, and moreover, that price is accessible to people. So it's not, you have to solve both the value for money and the fundamental affordability question. The fundamental affordability question is sometimes overlooked. If somebody's earning several $100,000 a year, they don't think of a car from a fundamental affordability standpoint. But for the vast majority of people are living paycheck to paycheck. So it actually makes a difference if the cost per month for lease or financing is $10 one way or the other. So it is important to keep improving the affordability and to keep, it's just like making the price
more accessible.
Yeah, exactly. Make the price more accessible, the value for money better, and to keep improving that over time.
But also to make kick-ass cars that people want to buy.
Yeah, it's got to be a great product at a great price, and the standards for what constitutes a great product at a great price keep increasing. So there's like you can't just be static. You have to keep making the car better, improving the price of it, improving the cost of production, and that's what we're doing.
Yeah, and in fact, like I said in my opening remarks, also like the updated Model 3 is a fantastic car. I don't think people fully even understand the amount of engineering effort which has gone, and Lars and team have actually put out videos explaining how much the car is different when it looks and feels different. Not only it looks and feels different, we've added so much value to it, but you can lease it for like as low as $299 a month.
Yeah. Without gas.
Yeah.
All right. The next question comes from George from Canaccord. George, please go and unmute.
Hi. Thank you for taking my question. First, could you please help us understand maybe some of the timing of launching FSD in additional geographies, including maybe clarifying your recent comment about China? Thank you.
I mean, like new markets? Yeah, we are. There are a bunch of markets where we don't currently sell cars that we should be selling cars in. We'll see some acceleration of that.
And FSD in new markets?
Yeah. So the thing about the end-to-end neural net based autonomy is that just like a human, it actually works pretty well without modification in almost any market. So we plan on, with the approval of the regulators, releasing it as a supervised autonomy system in any market where we can get regulatory approval for that, which we think includes China. So yeah, it's just like a human, you can go rent a car in a foreign country and you can drive pretty well. Obviously, if you live in that country, you'll drive better, and so we'll make the car drive better in these other countries with country-specific training. But it can drive quite well almost everywhere.
Yeah, the basics of driving are basically the same everywhere. Like, car is a car, traffic is a traffic light, road is the road.
Yeah, it understands that it shouldn't hit things no matter where it is.
Exactly. There are some road rules that you need to follow. In China, you shouldn't cross over a solid line to do a lane change. US is a recommendation, I think. China, you get fined heavily if you do that. We have to do some adaptations, but it's mostly smaller adaptations, not like an entire change of stack or something like that.
Yeah.
Hey, George, do you have a follow-up?
Yep. So my follow-up has to do with the first quarter deliveries, and I'm curious as to whether or not you feel that supply constraints that you mentioned throughout the release impacted the results, and maybe can you help us quantify that, and is that why you have some confidence in unit growth in 2024?
Yeah, I think we did cover this a little bit in the opening remarks too. Q1 had a lot of different things which were happening. Seasonality was a big one, continued pressure, pressure from the macroeconomic environment. We had attacks at our factory. We had Red Sea attacks. We're ramping Model 3. We're ramping Cybertruck. All these things are happening. I mean, it almost feels like a culmination of all those activities in a constrained period. And that gives us that confidence that, hey, we don't expect these things to recur.
Yeah, we think Q2 will be a lot better.
Yeah.
It's just one thing after another. Our attacks are crazy.
Yeah, exactly. It's just, if you've got cars that are sitting on ships, they obviously cannot be delivered to people. And if you've got excess demand for Model 3 or Model Y in one market, but you don't have it there, it's an extremely complex logistics situation. So and I'd say also we did overcomplicate the sales process, which we've just in the past week or so have greatly simplified. So it became far too complex to buy a Tesla, whereas it should just be you can buy the car in under a minute. So we're getting back to the you can buy a Tesla in under a minute interface from what was quite complex.
Okay, thank you. Let's go to Colin Rush from Oppenheimer. Colin, go ahead and unmute, please.
Thanks so much, guys. Given the pursuit of Tesla really as a leader in AI for the physical world, and your comments around distributed inference, can you talk about what that approach is unlocking beyond what's happening in the vehicle right now?
So do you want to say something?
Yeah, I can mention like the car, even when it's a full robotaxi, it's probably going to be used around 50 hours a week.
That's my guess, like a third of the hours of the week.
Yeah, it could be more or less, but then there's certainly going to be some hours left for charging and cleaning and maintenance. In that world, it can do a lot of other workloads. Even right now, we are seeing, for example, these LLM companies have this like batch workloads where they send a bunch of documents, and those are run through pretty large neural networks. And take a lot of compute to chunk through those workloads. And now that we have already paid for this compute in these cars, it might be wise to use them and not let them be idle, be like buying a lot of expensive machinery and letting them be idle. Like we don't want that. You'd want to use the compute as much as possible and close to like basically 100% of the time, make effective use of it.
That's why I think it's analogous to Amazon Web Services, where people didn't expect that AWS would be the most valuable part of Amazon when it started out as a bookstore. So that was on nobody's radar. But they found that they had excess compute because the compute needs would spike to extreme levels for brief periods of the year, and then they had idle compute for the rest of the year. So then what should they do with all that excess compute for the rest of the year? That's kind of
Monetize it.
Yeah, monetize it. So it seems like kind of a no-brainer to say, okay, if we've got millions and then tens of millions of vehicles out there where the computers are idle most of the time, that we might as well have them do something useful.
Yeah, exactly.
And then, I mean, if you get like to the 100 million vehicle level, which I think we will at some point get to, then, and you've got a kilowatt of usable compute, and maybe you're on hardware 6 or 7 by that time, then you really, I think you could have on the order of 100 gigawatts of usable compute, which might be more than anyone, more than any company, probably more than any company.
Yeah, probably. Because it takes a lot of intelligence to drive the car anyway. And when it's not driving the car, you just put this intelligence to other uses, just solving scientific problems.
Just like a human.
Or answering dumb questions for someone else.
We've already learned a lot about deploying workloads to these compute nodes.
And unlike laptops and our cell phones, it is totally under Tesla's control. So it's easier to distribute the workload across different nodes as opposed to asking users for permission on their own cell phones would be very tedious.
Well, you just drain the battery on them.
Yeah, exactly. The battery is also limited.
So like technically, I suppose like Apple would have the most amount of distributed compute, but you can't use it because you can't get you can't just run the phone at full power and drain the battery.
Yep.
So whereas for the car, even if you're a kilowatt level inference computer, which is crazy power compared to a phone, if you've got a 50 or 60 kilowatt hour pack, it's still not a big deal to run.
If you're plugged in,
whether you plugged in or not, you could be plugged in or not plugged in. You could run for 10 hours and use 10 kilowatt hours of your kilowatt of compute
per hour.
Yeah.
Already got a built-in liquid cooled thermal management.
Yeah, it's exactly
expense for data centers, so it's already there in the car.
Exactly. So it's distributed power generation. It's just distributed access to power and distributed cooling, and it's already paid for.
Yeah, I mean that distributed power and cooling, people underestimate that costs a lot of money.
Really big deal.
It does.
Yeah, and the capex is shared by the entire world.
Yes.
Sort of everyone owns a small chunk, and they get a small profit out of it, maybe.
Yeah.
Thanks so much, guys. And just my follow-up is a little bit more mundane. Looking at the 4680 ramp, can you talk about how close you are to target yields and when you might start to accelerate incremental capacity expansions on that technology?
We're making good progress on that, but I don't think it's super important for at least the near term. As Lars said, we think it'll be, exceed the competitiveness of suppliers by the end of this year, and then we'll continue to improve it.
Yeah, I mean, I think it's important to note also that like the ramp right now is relevant to the Cybertruck ramp.
Yeah.
And so like, we're not going to just randomly build 4680s unless we have a place to put them. And so we're going to, make sure we're prudent about that. But we also have a lot of investments with all our cell suppliers and vendors. They're great partners, and they, done great development work with us. And a lot of the advancements in technology and chemistry we found in 4680, they're also putting into their cells.
Yeah, I mean, a big part of the 4680, or Tesla doing internal cells, was a hedge against what would happen with our suppliers. Because for a while there, it was very difficult because every big car maker put in massive battery orders. And so the price per kilowatt hour of lithium-ion batteries went to crazy numbers, to crazy levels.
Bonkers.
Yeah, just bonkers. So like, okay, we've got to have some hedge here to deal with, cost per kilowatt hours numbers that were double what we anticipated. If we have an internal cell production, then we have that hedge against demand shocks, with too much demand. That's really the way to think about it. It's not like we want to take on a whole bunch of problems that just for the hell of it. We did the cell program in order to address the crazy increase in cost per kilowatt hour from our suppliers due to gigantic orders placed by every car maker on Earth. So,
okay, thank you. And the last question comes from Ben Kalo from Baird. Ben, go ahead and unmute. And you're still muted.
Well, I once again would just like to strongly recommend that anyone who is, I guess, thinking about the Tesla stock should really drive FSD 12.3. You can't, it's impossible to understand the company if you do not do this.
All right, so since Ben is not unmuting, let's try Shreyas Patel from Wolfe Research. Final question.
Oh, hey, thanks so much. Just, Elon, during the Investor Day last year, you mentioned that auto COGS per unit for the next gen vehicle would decline by 50% versus the current 3 and Y. I think that was implying something around $20,000 of COGS. About a third of that was coming from the unboxed manufacturing process. But I'm curious if you see an opportunity that some of the other drivers around powertrain cost reduction or material cost savings, would those be largely transferable to some of the new products that you're now talking about introducing?
Yeah, sure. I mean, in short, yes. I mean, like, the unboxed manufacturing method is certainly great and revolutionary, but with it comes some risk because, it's new production lines, but all the subsystems we developed, whether it was powertrains, drive units, battery improvements in manufacturing and automation, thermal systems, seating, the integration of interior components, and reduction of LV controllers, all that's transferable, and that's what we're doing. Trying to get it into our products as fast as possible. And so that engineering work, we're not trying to just throw it away and put it, in a coffin. We're going to take it and utilize it to the best advantage of the cars we make and the future cars we make.
Okay, great. And then just on that topic of 4680 cells, I know you mentioned it. You really thought of it more as like a hedge against rising battery costs from other OEMs, but it seems, even today, it seems like you would have a cost advantage against some of those other automakers. And I'm wondering, given the rationalizing of your vehicle manufacturing plans that you're talking about now, if there's an opportunity to maybe convert the 4680 cells and maybe sell those to other automakers and really generate an additional revenue stream. I'm just curious if you have any thoughts about that.
Right. What seems to be happening is that unless I'm missing something, the orders for batteries from other automakers have declined dramatically. So we're seeing much more competitive prices for cells from our suppliers, dramatically more competitive than in the past. It is clear that a lot of our suppliers have excess capacity.
Yeah. In addition to what Elon said, this is Karan, by the way. In addition to what Elon said about 4680s, what 4680 did for us from a supply chain perspective was help us understand the supply chain that's upstream of our cell suppliers. So a lot of the deals that we had struck for 4680, we can also supply those materials to our partners, help reducing the overall cost back to Tesla. So we're basically inserting ourselves in the upstream supply chain by doing that. So that's also been beneficial in reducing the overall pricing in addition to the excess capacity that these suppliers have.
Yeah, no, I mean, this is going to wax and wane, obviously. So, there's going to be a boom and bust in battery cell production, where production exceeds supply, and then supply exceeds production, and back and forth, kind of like, I don't know, DRAM or something. So it's like what is true today will not be true in the future. There's going to be somewhat of a boom and bust cycle here. And then there are additional complications with government incentives, like the Inflation Reduction Act, the IRA, which I always found like a funny name for a
comical name.
Yeah, is it like the Irish Republican Army, the Internet Research Agency from Russia?
Independent retirement account?
Yeah, exactly. Roth IRA. It's like Force Spider-Man situation, which IRA wins. But it does complicate the incentive structure, so that there is perhaps there's stronger demand for cells that are produced in the U.S. than outside the U.S. But then how long does the IRA last? I don't know.
Which is why it's important that we have both in-house cells and vendor cells to hedge against all of this.
Yeah.
Okay, thank you very much. That's all the time we have today. But at the same time, I would like to make a short announcement. And I wanted to let the investment community know that about a month ago, I met up with Elon and Vaibhav and announced that I'll be moving on from the world of investor relations. I'll be hanging around for another couple of months or so feel free to reach out anytime. But after this 7-year sprint, I'm going to be taking a break and spending some good quality time with my family. And I wanted to say that these 7 years have been the greatest privilege of my professional life. I'll never forget the memories from, I started literally at the beginning of production hell and just watching the company from the inside to see what it's become today. And I'm especially super thankful to the people in this room and dozens of people outside of this room that I worked for over the years. I think the team strength and teamwork at Tesla is unlike anything else I've seen in my career. Elon, thank you very much for this opportunity that I got back in 2017. Thank you for seeking investor feedback and regularly and debating it with me.
Yeah, well, I mean, the reason I reached out to you was because I thought your analysis of Tesla was the best that I'd seen.
Thank you.
So, thank you for helping Tesla get to where it is today over 7 years. It's been a pleasure working with you.
Thank you so much. And thank you for all the thousands of shareholders that we've met over the years and walked around factories and loved all the interactions, even the tough ones. And looking forward to the call in the next 3 months, but I'll be on the other side listening in. Thank you very much.
Thanks.
Okay, chat. So that is the end of this call. Again, let me know what you guys think about it. Tesla having a pretty good initial reaction. Again, most likely because they were just really extended on the downside. We'll see if the downward trend continues. Again, Tesla currently sitting at 160s right now. If you want to check out some of my sponsors, these are both sponsors of mine. I'm definitely biased in their favor because they pay me money, so I'm biased, of course. I always tell you guys the same thing. But if you want to check out Apex. Apex is a funded account program. If you want to day trade and if you want to look at the queue, you can see the queue looks very similar to Tesla chart right now. Very similar to Tesla chart on the queue. And you can basically day trade this right here, the NASDAQ in futures. And there's no PDT rule in day trading futures. You can buy market, sell market, all that good stuff. Very similar to day trading stocks. There's just no PDT rule in futures. And you can learn to trade with these funded account programs. Apex is one of the most legit in the world. What they do is they give you a demo and they test your skill. This base one, which is the cheapest one, is only about 40 bucks a month. If you use my link, you get it for like 30 bucks a month. I mean, it's only about 30 bucks a month if you use my link, which is BT is the coupon code. And again, they're going to give you a 25K demo. If you can hit $1,500 in profit without losing $1,500 first, they fund you 25K with a 90% split. And so I always describe it as kind of the best of both worlds. Limited risk. If you lose, you're only out 30 bucks. But if you're good enough to pass it, you get between 25K in funding all the way up to potentially 300K, depending on which package you choose. And again, it's a great way to limit your risk when you're learning how to day trade. Most day traders lose, and that's probably the same here. But it's just a good way to limit your risk. If you want to check it out, here's the link. You can also check out my other sponsor. Use coupon code BT. It'll get you the max discount. You can also check out my other sponsor, a company called Chart Prime. It's a trading view indicator service that you can use in stocks, crypto, forex, futures, anything with a symbol on trading view. And you can kind of see how powerful this can be. Look at the strong signals here. Just back testing it really quickly myself here. Check it out. So look, strong signal, beautiful drop. And this is a 5-minute chart. So this is like an hour plus of drops. Strong signal there, you got a little drop. Buy signal there, you got a beautiful bounce for hours. Sell signal there, you got a drop. Strong signal there, you got a bounce. Sell signal there, you got a drop. Strong signal there, you got a little bit of a follow through. Look at this buy signal, literally call the exact bottom. Sell signal for hours and hours afterwards. I can't guarantee this is going to make money. I can't guarantee this is going to make money. Nobody can. But again, you can look at the strong signals. Look at this one showing up, beautiful follow through. This one showing up, beautiful follow through. You can see the wedges it shows you as well. It's only 40 bucks a month if you use my link. I'll put the link out. And yeah, guys, I'm going to get out of here. My daughter's not feeling great. And so I got to run. Chat, I don't really have much time to stick around. Y'all be good. We'll be back tomorrow morning. Tomorrow morning we have... let me see. Tomorrow morning we have durable good orders in the morning and then meta earnings in the evening. Thursday we got GDP. Friday we have PCE data. And so again, I'll see you guys later. Y'all be good. Have a great day, guys. We'll see you guys tomorrow.